Are we good? Are we good? Should be, should be Gucci. Are we good? Oh, we are Gucci. Gucci. We are Gucci. Mm, 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 mm. New week, newer juice. Okay. I mean, in terms of getting caught up, nothing really to get caught up on, right? Kind of talked about potentially taking along here. If you take it, you would have got out break even. But we talked about managing our risk, right? We would have got a nice little free roll. So far, it seems that we came down and swept this little thingity thing right at our imaginary yellow line, right at the golden pocket. Okay, shout out to the math. What is this golden pocket? Bullshit. They're just random numbers, bro. What? 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 Just random numbers. Quite the gap, though. Quite the gap on futures right now, right? Oh, gappity gap, gap, gap. Everything else doing? Anyways, let's update our levels. Let's have some videos we need to watch. We gotta get through the pipeline. There's a new interview and a new Chart Fanatics video. Double whammy. Boom, 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 boom. That juice, that juice. Not looking at the data, but I'm surprised we kind of swept that wick though, to be honest. There really was not much going on there in terms of like liquidity. Let's lower this a little bit. 893702. Oh, whoops, that's not it. 8898. 88915.2. 87501.8. Oops. I just fucked that up. Get rid of some of this stuff now. Yeah, I'll get rid of this. Get rid of this. Need some of this garbage marked out.
said that's the pressure of man. You don't feel it when you fade it right. Heat map.
And there's something wrong with Windows and TradingView. Like this left to right scroll wheel does not work until you like tab off of TradingView and tab back. Never happens on my Mac. Interesting. Anyways, we'll load up all of these imbalances and kind of chill. Put this up here. Let these all things all load. Dev, hello. Hello, Dev. Okay. Load up the rest of the data and then get this show on the road. You know, funnily enough, I was watching a podcast today talking about some of these Chinese LLMs, and like apparently they put spyware. Like if you use them to produce like tons of code, like thousands of line code, like there'll be literally spyware in the code. And this was on the Moonshots podcast. It wasn't some like random people either.
This guy is a...
Okay, we got 2 videos queued up. Boom, 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 boom. It's on docket for today. Like one's with Chris Camilo, which is a pretty interesting trader. He doesn't like really do. Like he doesn't really look at charts. He trades just like kind of looking at sentiment data and like what people are saying on TikTok, etc. I mean, I don't know him that well. I'm sure he'll kind of go more in depth with whatever's in his interview, but also like huge PNL. Guy's like almost 9-figure trader. So if you don't see too many of those on YouTube, which makes it even more interesting. And the other one is just, I don't know, some guy talking about his swing trading strategy, kind of on like that trading strategy review channel. No clue what it is, but probably nothing particularly interesting, I'd imagine. But we'll watch it anyways, right? I should check it out anyways, just in case something interesting worth stealing. I'm a thief. I steal people's ideas, right? Steal what's good, throw away what's bad. Of course they're going to spy. Well, that's a pretty big deal, right? Can't just ignore that. Pretty big deal. It's not something you kind of just sweep under the rug nonchalantly. Yeah, it seems like that Kimmy one is quite popular in Silicon Valley. Mostly because of the fees. If you're running like an actual like startup business where every one of your employees is using like Anthropic, for example, for like code generation, like the token costs add up a lot. Which makes sense, does make sense. Just finish loading up our data here and then we'll be good to go. Or the intelligence bandits. Not the wet bandits. Sticky bandits. The idea bandits. Malone reference. I mean, I've seen the movie, but I don't remember the exact reference you're making. I don't know if I've even seen all of them. Isn't there like a whole series of Home Alone movies? And also, like, isn't there like a newer generation one as well? The one I remember is with like the pigeon lady in the park, Central Park.
I've been trading hard, puffing loud, math in place. You still guessing wrong. I'm still ghosting every space. They chase with, I fade the high, top shelf gas.
Okay. Home Alone 2, Austin, New York. That's the one. Not sure. Because aren't those people in like in multiple movies? Like those two bad guys? Home Alone. Oh yeah, they are in the multiple movies. Oh, there's 6 Home Alone movies. That's a lot. I think I've seen 1 and 2, maybe 3. Okay. Let's get some notes ready. Google Docs. Let's see if this gap gets filled or not. Alarm there. The Pigeon Lady was in Home Alone 2. Home Alone 2 is when they switched their names from Wet Bandits to Sticky Bandits. I've only seen the first 2 or 3. Yeah, I remember it being a pretty good movie. Pretty good movie series. It's kind of move my water. I'm afraid it's gonna spill out my laptop if I move this microphone. That thing over there just to be safe. We can move this thing a bit closer while we lean back and relax. Like a lazy ass. Oh, feels good. I can't work out, so all I've been doing is going to the gym and doing like obsessive amounts of cardio. So now I'm gassed. Feeling hella lazy. This should sound better than the previous streams. I'm just leaning back, I'd imagine. Okay. Seems like someone's trying to walk up the price here in the order book. Just be mindful of that. Where'd my notes go? Have 60% volume. What, you? You are? Also, the formatting of my notes messed up. What is going on here? I'm at that level. I mean, it should be pretty good on my end. The thing is, how much louder is this? Same thing, more or less. Pause the music. We put it on 4x speed. Are you guys prepared for the 4x? Or no? Or no? Or no? I'll slowly wean you guys up to speed. The speed ratings.
This guy turned $20,000 into over $70 million in verified profits, but Wall Street hates his strategy and he never uses a chart.
The number one thing that separates the wealth class as opposed to people that don't own wealth is that wealthy people have money earmarked for higher risk, higher reward. When you have enough money deployed in high-risk assets relatively diversely, it always results in higher returns.
Whilst most traders focus on price action or data reports, Chris Camillo has the unique strategy of being up at night reading TikTok comments, a strategy he calls social arbitrage behind his 17-year track record with over 70% gain per year. In this episode, Chris reveals his strategy to spot trade ideas before they hit the charts, the mindset needed to manage such huge positions, and how any retail trader can copy his exact process with nothing but a phone.
What I do is super simple, but there is a kind of a regimented process that I go through, something that anyone can learn. So it's not, I don't do technical trading, I don't do fundamental trading. Maybe that's for you. I would rather shoot myself. I cannot imagine that that appeals to more than 2% of normal people. And fundamental trading, being a better analyst than the guy that went to Wharton and has been doing this for his career, do you really want to out-edge that person? That seems ridiculous to me. For most people, the right...
That's what I was saying. That's what I was telling you. That's what I was telling you. That's what I was telling you.
A little bit quicker than the suits on Wall Street and connect the dots a little bit quicker and get in on the next big thing.
I guess the ultimate opportunity representative of your approach is probably what happened with GameStop, where community came together to be an FU to the system.
This is very different from GameStop or GameStop.
Okay.
Like, what I do has nothing to do with that. I'm going to give you a very recent example from the past 3 weeks.
Ladies and gents, welcome back to another episode. I'm going to introduce a very interesting guest, Chris. We've got a very interesting conversation ahead of us because I've had a conversation with a lot of type of people on the show, but I think you shine as someone that's particularly unique, predominantly because of your track record and success, but also the way you've engineered your success, which has been pretty unusual. So I want to start off with this idea of community and consensus and sentiment, which is what your social arbitrage seems to be. But when I first came across your content, I would have thought that the dumb money, the retail trader, is going to be pretty far away from the institutional money and what they're going to be seeing, believing, the insider information they have. So how is it that understanding the retail sentiments, which is probably a drop in the ocean in liquidity and volume in the market, is something you can read into and then generate a bias?
Yeah, you mentioned Dumb Money. That's the name of our YouTube channel.
Exactly so.
It was actually kind of like poking some fun at what institutional Wall Street has called retail traders for the last few decades.
Dumb money? Dumb money? Okay, interesting. Give that a follow.
And we were like, fine, call us Dumb Money. We'll wear it as a brand and show you what we're capable of doing. So it's like we actually don't think we're Dumb Money. That's just what they call us. Yeah, I mean, I think there's this huge misunderstanding in this sector of finance that's evolved over the past 50 years. And it's, if you don't have a financial pedigree, if it's not your actual profession, if you don't come from a certain elite background of finance, that you're not capable of being a great investor. And that is quite honestly something that has always upset me, not because of me personally, but because it keeps so much of the world out of financial markets, right? It really keeps people away from becoming part of the investor class, because they feel unless they have enough capital to have a professional money manager or to where it makes a difference, they're just not going to be part of it. And that is my entire mission in life, is to change that, right? And so I'm just one person. I'm going on, I think, my 18th year of 70 to 80% annual returns total portfolio. This is actually the second best year I've had in 18 years. I'm trying not to do anything stupid in the next few months, so it stays that way. But we actually have a massive advantage over institutional investors. And whenever I say we, I mean just like regular.
That's a pretty impressive record, right? I'm curious if that guy's gonna be like a market wizard in the next book. They haven't announced a full list, I don't think. That's pretty crazy, right? 18 years straight of 70 plus return a year.
And I don't necessarily mean like chartist or technical investors or like people that spend a lot of time investing. I just mean just regular people that have regular jobs that would like to start making money with their money. We see things that institutional Wall Street doesn't see. We see things sooner than they see them, because institutional Wall Street is super biased. They actually are prone to a lot of groupthink. They mostly look the same. They mostly have come from the same background, high wealth levels. They live the same. Their lifestyles are similar. So they're not actually seeing the world change to the degree that us as kind of more regular people, and I put myself in that bucket still, to the extent that we see the world change, because we're actually living the change. We're part of it. We see it in our neighbors, our friends, our family, our coworkers, right? Like, we live all around the world. We don't generally live in just one of 3 cities. So we have a natural advantage to surface change quicker than Wall Street. And my entire methodology that I've developed over the past, 15 or so years, 17 years, I guess, is called Social ARB. It's essentially observational investing. And it really is all about the quick discovery of change in the world, whether that's a shift in culture, consumer behavior, a trending product, a trending brand, maybe a trend that fell apart. But being able to surface that quickly, and then being able to connect the dots to investable opportunities in the public equity markets, or in some cases now the private equity markets, because that's becoming approachable for regular people for the first time, quite honestly. So that's it. It's just observing the world and connecting dots. So there's no one that is better positioned to observe the world and connect dots better than regular people, right? You don't have to be a finance pro. You don't have to be like a math genius. In fact, if you're one of those 2 things, you're probably at a disadvantage.
I've spoken to a lot of institutional traders, and even just 2 days ago, I had someone who worked in a prestigious bank and then became the trading floor manager. And I was just going through his career, and he didn't have a degree, and then he didn't have any formal assistance from the bank. He said he was learning online, and then that was that message was passed down to his trading floor as well. So when I sit as a retail trader and I think about the big traders in the banks, I think they have it all, they know it all, and they're so much superior. But I realize it's not quite the case often, where they're more similar to us than we may think. And when you have your ears on the ground, as you're saying, you can maybe carve out an edge. When we talk about sentiment, which is basically what you're doing through sifting through comments, how can you turn into almost a science or find precision when you're going to have all walks of life, all ideas, the full spectrum of ideas in the comment section? How do you find what's key?
So there's actually, like, what I do is super simple, but in order to, effectively invest with this strategy, there is a kind of a regimented process that I go through.
Okay.
It's something that anyone can learn. I wrote a book in 2010 called Laughing at Wall Street. Jack Schwager, who wrote Market Wizards, wrote a book called Unknown Market Wizards and did a chapter on me a couple of years ago. He did a really good job explaining, probably better than I could explain it in my book, of explaining the methodology and that process. So it's not about like what sort of change do you care about. Like it's not about the things that you know a lot about. You're really starting with a really big funnel. You're just essentially, and there's a process to.
Was he in that
like
book?
TikTok comments. That's like my gold standard for information. Is I read hours of TikTok comments
Interesting.
every night. And it's because that's where people share their thoughts, their dreams, what they're buying, what they want to buy, what movie they saw last night, what type of food they're preparing that day. Like it's where they share the most intimate details of their life, believe it or not, and their feelings is on TikTok in those comments. And to some extent, that also happens like in Reddit to like other demographics. But if you start there and you just have a really open mind and you're not looking for any one thing, you're just looking across a spectrum of videos and topics and comments, things fall in your lap, right? So
Do you feel there's a baked-in bias in the comments? Because I spend hours on TikTok and I consume social media, but I've never left a comment myself. So when I think of the person that may leave a comment, whether it's angry, whether it's what they want to achieve out of life, that is a pocket of people and not necessarily everyone in the market.
I actually think that like TikTok specifically as a channel is broad and diverse enough that the comment section is representative.
Interesting.
Nothing will be perfectly representative, right? But I do think it is representative enough. At least, me spending hours a day for 8 years on it, I found it to be representative enough within the pocket. So if you're looking at fashion and videos about what are people wearing this spring, and you look at the comments of, yes, I love that, I can't wait to get it, it's sold out, and you see like 400 other people saying, yeah, that is the coolest skirt I've ever seen, or whatever it is, right? Jeans, whatever. It's fairly representative that that's going to be a hit product, right, for that brand. So I don't know. Nothing's perfect,
Sure.
but and this is the issue that Wall Street has with my style of investing, is that there isn't ever going to be years of correlated data, right, with a high R value that you can say, hey, when you find this many people talking about this, historically, it's had this impact on this publicly traded company. That's what Wall Street wants. Yeah, the world changes. Even the contextualization of how people speak changes. So I had a company called Ticker Tags, I don't know, 8-ish years ago, my business partner, Jordan, who's my YouTube partner. And we actually were the first social data intelligence company for hedge funds and sell-side banks on Wall Street. And I spent 4 years of my life trying to train hedge funds, the biggest in the world, and banks on how to interpret conversational data sets and how to connect the dots back to equity research. And we eventually sold that company to Jefferies Bank, who kind of like molded it into other data sets. But there was so much resistance. And the resistance was, wow, like we can see that it works, but it doesn't work in the way that we're accustomed to trading off of data. Like we really need to see that correlation before we can make, a $20 million trade based on this piece of information. And they're used to looking at credit card data. They're used to looking at, data that has lots and lots of correlation to companies. And while, yes, that could be perceived as a weak point of conversational type analysis or observational investing, I see that as a strength because the data set's a little dirtier. It's a little bit more interpretive. So you can show the same bunch of conversations to 10 people and they might interpret it in slightly different ways, or the importance of it in slightly different ways. But that's where the opportunity is, because what do you do before you buy a product? You usually think about buying it or you talk about it, right? And so if you're analyzing speech and comments, you're able to get inside of the head of humans before they act on something, no matter what that is. And so while yes, the data set isn't as clean or as correlated, you're essentially getting ahead of the data sets that Wall Street uses to historically get ahead of earnings, right? So for a long time, Wall Street kind of had this like advantage over retail traders, and that they were the only ones that could afford to buy all these expensive transactional data sets. And so we would see stocks that would move like a week or two before earnings, and then earnings came out like, wait a second, who knew that? It's not that they knew it, it's that the data was like, as you get closer to earnings, it's starting to reflect more accurately the register volume of those stores or those brands, right? Well, how do we beat them? How do, like me and you, like how do we beat them? We have to like catch information before that happens. And it's been incredible, and people don't realize like anybody could do this.
Let's take a moment to talk about a partner of the show, a leading prop firm that is Funded Next. And it's important for me to listen to our
Interesting.
community to see who are you working with and how can we make your experience and reliable. Does this extend our prop firm in the industry, Funded Next? Check out the link in the description or use the code TOT. Does this extend out to, regular opportunities, or are we more talking about, let's say, I guess the ultimate opportunity representative of your approach is probably what happened with GameStop, where community came together to be an FU to the system. But how often do these opportunistic or black swan events happen where social media or community aligns to shift the stock? Let's say
This is not. This is very different from GameStop or MemeStop.
Okay.
Like what I do has nothing to do with that. I'm going to give you a very recent example from the past 3 weeks of a trade that I made based on observational investing. So I actually received a text from a friend who had just seen the Backstreet Boys at Sphere. And he said, in Vegas, the big
yes.
place, it's a publicly traded company. And quite honestly, that company has had some trouble since they listed publicly the last year, just trying to find themselves of how to best monetize it with concerts, or they had this movie called Postcards, and it was like doing okay. Well, the Backstreet Boys, for whatever reason, they did a really good job with their concert there, and it was packed. And he's like, dude, this is like one of the biggest deals ever. They're going to sell out every concert. And the Backstreet Boys, they haven't been like this in years. Like, they've been performing but not selling out. And all of a sudden, the way that they pulled it together with the production at Sphere, people are going nuts. He's like, I think this could really help the company. And so I looked, and sure enough, the reviews were through the roof. And then I started looking at the ticket sales, because you can actually like extract information on Ticketmaster, and you could actually see how many seats are selling out, right? And I was like, wow, I hadn't seen this at Sphere since they opened, really. At the same exact time, they were coming out with a new movie they've been working on, The Wizard of Oz, but redone with AI to be like that whole Sphere environment where it's like circuit, like the tornado, all that stuff. So I was looking at the first people that saw that movie, like it had only been out for 2 or 3 days, and it went super viral. Like there were now dozens and dozens of TikToks that were getting hundreds of thousands to millions of views, and the comment stream was, oh my gosh, I'm going to Vegas with my family to see this. That is so cool, because they have this like tornado effect and there's stuff dropping from the ceiling, and it's just for whatever reason it's working, right? And so I'm reading thousands of comments of people that are like, wow, that's expensive. It's like $300 a ticket, $250 a ticket to go see a movie, an hour and 20-minute movie. But they're like, we're doing it.
Thing is, like, what does this guy do if like social media becomes like overrun by like AI bots, right? Stuff like that, or like it gets banned. TikTok gets banned.
We're doing it. And then sure enough, I start looking at the pre-sales for The Wizard of Oz. And it's unlike anything I had seen at Sphere, right? And it's like, this is really a moment. This is a moment for this company. And it was something because I had someone on the ground who's in Vegas that experienced it firsthand. They looped me in. I did the social research on TikTok, right? I'm reading thousands of comments. I'm like, this is real. This has legs. I don't know how long it's going to take for other investors to see what I'm seeing. But I'm in. I went all in, heavy, levered investment in Sphere.
Okay.
Now, if you look at Sphere stock, it's up like 50% in the last few weeks. Okay, because of Backstreet Boys and Wizard of Oz. It took like a week. It literally took about a week and a half for the rest of the world to see what I saw. So it's all about seeing things a little bit quicker than others, doing the research, connecting the dots, having a good understanding of, will the thing that I see meaningfully impact this company or not, right? That takes a little bit of work, and you get better at that over time. And then you have to determine, like, is everybody else seeing what I'm seeing, or is it just me? And like, if you look at the investor chatter around that company, if you look at the institutional reports that are coming out, like sell-side research, are they talking about this yet? Am I seeing articles about this yet, right? And so you kind of get a sense for the degree to which that information has been disseminated amongst like the investing public or institutional Wall Street. And if you find something big that's needle moving that most people have not caught on to yet, that's when you have the making of a great observational trade. And that's literally all I do. That's all I've been doing for 18 years.
Super interesting. Now, if I'm to observe this example alone, if this idea came to me or news came to me and then I did a bit of research, I might have the conviction to put in 5, 10K, but at your stage when you're managing millions, where do you get the confidence from to take a kind of an idea and it's a sentiment, it's a feeling, to then put significant capital behind it?
I think it all starts with the concept of bucketing money appropriately. And I think this is something that people must learn to do. I would say the number one thing that separates wealthy, the wealth class, and why the wealth class continues to get wealthier, as opposed to people that don't own wealth, that can't just catch that wheel yet, is that wealthy people have money that is earmarked for higher risk, higher reward, right? And with higher risk, when you have enough money deployed in high risk assets as relatively diversely, it generally always results in higher returns. So I think it's really important for every single human on earth to have that bucket. I don't care if that bucket has $5 in it or $5 million in it, you have to start that bucket. So call it a separate account that is very different from your normal investing account or your savings account or your retirement account. Maybe you only put money in that account that you are able to get through making trade-offs in your life. Like, I would normally don't clip coupons because I don't care about saving $1, but if I think I can grow that dollar to $100, which is what I always tell people, you can with this type of investing over time. Now every dollar is $100, so I'm going to start clipping $1 coupons or 50-cent coupons, right? And then like you get this account, it has like $10 in it, then it has 100 or 500 or 5,000, and now you have the money to make a risky investment on something that you really believe in because you're not afraid of losing the money, because that money was specifically saved through making trade-offs to allow you to build meaningful wealth relatively quickly, like not through 30 or 40 years, but through 3 to 15 years, right? So that is something that anybody can do, but it all starts with having a bucket of risk capital, that you're not afraid to make a concentrated bet or a levered bet. Because I trade a lot of options on Spear. It wasn't stock that I bought, it was stock options. So when the stock goes up 30 or 40%, I'm not making 30 or 40% of my money. I actually made like 300 or 400% of my money. So I actually made like 3 or 4 times my money. And I put a lot of money in it, right, over the past few weeks because of the Wizard of Oz and Backstreet Boys, to the point where I could probably buy every seat in the theater if I wanted to for a private screening, right? I mean, but that's how you do it. Because truthfully, if it's coming from your retirement account or your savings account, you probably shouldn't make a big bet like that that's levered and concentrated.
At your stage, if you were to see your entire portfolio, do you segment it in a typical way of like have some in indexes, have some in commodities, gold, and then this portion is the high risk, high growth account, or now have you kind of put it all there?
So I think everybody has a different investment objective. So like mine is probably not the same as yours or anybody that's watching. So I've been able to grow my portfolio large enough now that I'm not necessarily needing or wanting to be diversified to generate X amount of return, right? I have like really ambitious goals. I'm trying to grow my account to $1 billion for my charitable foundation, right? So like I'm like passionate about pediatric charities, leukemia, cancer, autism. I'm passionate about animal welfare. I'm actually becoming very passionate about elder care as well. So like I have this charitable foundation, and in my head, I'm like, I think I can grow that to $1 billion plus foundation and start to make a really big, I really support like small, medium-sized charities that I know. They're like doing insanely incredible work, like life-changing work that will actually like meaningfully save people's lives. And I'm like, I think I could help. I think I could actually make a pretty big dent, and I could be one of those people that can like, I'm so good at doing what I do, I kind of feel like I owe it to the world to grow that capital and to redirect it in a really meaningful way. So that's my objective. And I'm not going to get there unless I continue to take really big swings on high conviction bets that I believe in. So when my portfolio, long way to answer your question, is it's mostly still taking really big bets across the board. Why? Because I'm going to be fine. You know what I'm saying? Like if I miss a few of those, I'm going to be fine. If I miss like 5 of them in a row, then maybe I'll step back and I'll be like, okay, maybe I need to like tighten up the ship here and get a little more diversified, be a little more cautious, a little more conservative with my approach. But that hasn't happened to me yet. Okay. So, but I have a really ambitious goal. I would assume that most people are not sitting in the same boat as me trying to achieve that. So my aggressive approach is probably not appropriate for almost anybody else.
For the last 2 years, a proud sponsor of the show.
Interesting. Interesting.
From Alpha Capital. And for the years that I've been working with them and that's title with 20,000. Let's get back to the episode. Looking at your starting in 2007 to date, I think you started with $20,000. Your track record certainly points towards the fact that you're an anomaly. Do you feel like you're an anomaly?
So this is what the community
definitely unique
is so amazing with. So yes, technically I am an anomaly for now, but I have encouraged and inspired so many other regular people over the past decade or longer, people that read my book back in 2010, that started to do the exact same thing that I'm doing today. And I have now met so many of these people, and they've DM me, and I see their returns. And you would be stunned how many regular people are generating like regular 30, 40, 50, 100% returns on their total portfolio doing what I've been doing. So very similar returns. And these people are like a dentist or a UPS delivery person or like a homemaker or a teacher or just like it's stunning the diversity of people that are doing this. They're not like proficient in any one area. They've just really taken it seriously. And then what happens is after a few years of that, when they see it working, then they get really serious. They're like, wow. And like what happened to me is I started doing this type of trading in 2007. And you know, my whole thing when I wrote my book, by the way, when I wrote my book, I kind of thought it was an anomaly. Like, I was like, am I just lucky? I turned 2,000 to 2 million using this methodology in 3 years. Excuse me, 20,000 to
So at that point, what stopped you from thinking, I've had a lucky run, this is brilliant, versus, no, this is a strategy and a way of...
Well, I did mostly think that it was a strategy that was effective, but you know, when you really start thinking about statistics and you start thinking about like edge case scenarios and anomalies, you have to be honest with the fact that there's a theoretical possibility that maybe I just am an edge case that the trades just happen to work out. You know what I'm saying? Like if I did
1-2 years, yes, but not on 17.
Correct, but that was on 3 years, right? So that was on 3 years. So I was like, if I can pull this off another 2 years, I'll really believe in my methodology. And then of course, here we are. It's insane. It's like 2025 now. It's been, 18 years. And like I said, this is like the second best year of my career. I actually can't believe it. So
did you ever face an imposter syndrome kind of moment?
Not a lot, on and off. Like if I have like 2 bad trades in a row, yes, like 2 bad trades.
Yes.
But then you break down, why did I make the mistake? Well, I wasn't as regimented as I usually am. I kind of, I missed this critical piece of research that I should have done. The old me would have done, but I'm too distracted with life, and so like. No longer. I don't have it any longer.
The track record is
not this deep in. I still have a number in my head. I want to hit 20 years. Like so like in my head, I'm like, I really want to hit a 20-year track record.
Oh, it's a video. I'm like, what the hell's that noise?
For me, and maybe when I hit 20, it will move. Then the number will shift to 25 years. But right now, I really want that 20-year track. So I want to make sure I don't do anything incredibly stupid the next 2.5 years.
But
right?
Incidentally, the show is called Titans of Tomorrow, and the reason we chose that name is because you may have a 17-year track record, you may be trading 8 figures, and you are at the top of the mountain. You are a titan, but nonetheless, you have always of tomorrow. It's like, what's next? What's the next big thing you want to chase?
I think I've done a few interviews the last couple years looking back, and people are stunned when I tell them that I think my biggest trades are ahead of me. And I've been telling them this because I see the change happening in the world, and I know that the faster the change, the more opportunity in financial markets to monetize that change, especially with my methodology. So I knew I had a very high conviction a couple of years ago that the biggest trades were in front of me, and sure enough, I love it that I'm here in 25 and that this is the second biggest year I've ever had, because everything that I thought was going to happen with AI has actually been happening, and I still think that those biggest years are ahead. Now, I do have somewhat of a concern of how difficult it will be to put up huge years like 5 to 10 years from now. But I think the next 5 years, there's so much disruption happening in the world. There's so many unknowns, and there's so much noise. Noise is your friend as an investor. I don't know if I've ever spoken about this, but it's something I think about so often now, because the amount of just noise, what I mean by noise is political noise and macroeconomic noise. The amount of attention that politics and macroeconomics sucks out of the market is such a strategic benefit if you don't allow it to impact you.
Okay.
So everyone's
Already Mr. talks about this as well.
About interest rates. Everyone's talking about Trump and this, and like, what is the administration going to do, and war and geopolitics, and like, no one's actually granularly talking about the impact that Wizard of Oz and Backstreet Boys are having on Sphere. You know what I'm saying? Because they're all so consumed with noise. Listen, even I love all my peers on financial YouTube and X. I love them all like they're my friends, and it's their job is to cover what people care about, and that's generally what people care about. So much of their content is focused on that stuff.
Yes.
And I love it because it's like they're basically taking, if you think about the investment world as just a competitive set of traders and institutions, like they're all so consumed by noise, then it makes your job easier.
We care about those things because we think, or we're told we should care about those things. And it's like the blind leading the blind kind of idea. I want to understand. So let's say this Sphere and Wizard of Oz and Backstreet Boys scenario. I would say it's pretty hard to time that. Whereas I saw you speak about the Barbie movie. So this one I can understand the timelines because there's a release date on the movie and then you can see the reviews a little bit after. When it's something like this, how do you time it? Are you looking at technicals or how do you know when to call it quits and say it's a loss?
It was really easy to time this, and I'll tell you why. Every stock has an investor base they're looking at the things that are meaningful to that stock. So I knew that it wouldn't take that long for people that were invested in Sphere to realize that Wizard of Oz is knocking out of the park and they're selling out shows, right? So I knew that my objective was to figure out the degree to which that was going to happen, like right when it first came out. So I was watching a lot of videos before it was released.
Okay.
And then the second it was released, that Friday, I scoured the end of the internet for every human in the world that had seen that show or was there and commented on it, right? And then I would find their video and I would read all their comments. And I did that on Saturday and Sunday as well. And I put a really big trade on that following Monday because then enough people, I think they had 3 days worth of shows. So I was able to aggregate enough information. It was still very off radar for Sphere investors because it would take another week or so until they realized what was going on. But I knew it wouldn't take long. And that was really powerful because I was able to buy options that expired like that Friday or the following Friday. I forget which ones I bought. I think I traded up a couple times that were like really cheap because the expiration date was pretty quick. So the stock would have to move in a short period of time for me to make money. And I thought it would. So that was like a gold opportunity for me because I knew the window was going to be pretty short. If the window's not as short, it gets harder to make a lot of money because you might have to buy options or just equity. And then you'll still do okay, but you don't have the ability to leverage 10x, 20x on your trade.
Do you look at the charts? Do you look at technicals?
No, I don't even. I know this sounds insane, and even as I say it, it's not 100% true, but I try really hard not even to look at stock price or any fundamental. So
you go out your way to not look at the
so if I am entering a trade, whatever the stock is trading at, I should be blind to. And when I exit that trade, I should be blind to whether that stock went up, down, whatever it's trading at. Like I should be able to execute my trade without ever knowing anything about the stock. Does that make sense, or does that seem crazy to you?
I follow, but I don't understand the why.
So because I'm only trading information. So if I am trading information asymmetry, I'm trading the fact that I found one piece of information. In the case of Sphere, it was the fact that Wizard of Oz was going to really drive a lot of foot traffic to the Sphere and they were going to sell a lot of seats. And then I made an assumption that that would obviously be a big positive for the stock. So I'm only trading the fact that I have determined that that was going to happen and the market doesn't realize it yet. So my exit window on that trade is when the rest of the market sees what I saw, which is articles and investor chatter about seats selling out at the Sphere and this being huge for the company. And that's when I start to exit. So the price of the stock has nothing to do with when I purchased or when I sold. And I should theoretically, and I'm telling you I'm lying to you because I always look at the stock price. I'm not going to pretend that I don't. But theoretically, I should be able to make that trade without ever looking at the stock price and not knowing if I made or lost money until after the trade is over.
So if I was to follow this approach, I think the last box I'd want to tick is the idea that I have or the thing that I'm seeing that I hope other people are not seeing yet. What if that's already priced in? So then I would want to look at the chart to see, have I got recent movement? Have we got volatility coming in just to check? Have I got a...
Yeah, that's what I was wondering.
Asymmetry?
Okay, so you just nailed it.
It's like, well, what if the company is like quite overvalued when like making that decision, right? It seems interesting. Don't know if I'd be able to do this, to be honest, but definitely an interesting approach.
It is somewhat appropriate to factor in the stock price, but not alone. Is sometimes a movement in the stock price could represent the fact that that information has been disseminated. So still, the movement in the stock price alone is irrelevant. But if you see that the stock has moved up recently, that could be a signal.
A good question. I like this guy's voice. Yeah, definitely is an interesting, very deep, very slow.
That maybe it's because other people have picked up on this information. So
Definitely unique though, right? How many people do you see on podcasts like this who made like 9 figures trading, and then to do it in this manner is like very short, like borderline strange,
the
right?
price moved up, and that means that happened, because you have to now see if that's why it moved. It could have moved up for a completely different reason, which is fine. But the stock hasn't moved, okay, at all, like recently, like in the past few weeks or a couple months. That is a really good indicator that it's unlikely that people are aware of this information. So in that one situation, yes, the stock price could become relevant, just as a indicator, like an indirect indicator of information
A
dissemination.
million monkeys a typewriter. One will eventually write Shakespeare. I don't know about that. I don't know about that. If he did this like 1 or 2 years, like sure, but this like guy's approaching 20 years straight of consistent profitable returns doing this.
When you are doing your thesis, are you using any AI scrapers to sift through and build a report? Do you have a team behind you looking through comments, or is it you manually scrolling and searching?
Yes, so I am using AI for the first time. We have a proprietary AI software that we have built kind of like in-house that, you know what, if it's okay for me to release the name of it, because it's kind of like open, we want to like share it with other retail investors, I'll tell you later and you can put it in the notes, okay? But like, yes, this AI basically does everything that I do, believe it or not, automatically for like every ticker. So it basically looks for it'll take a ticker, it will break down all the things that are meaningful. It then goes on like Google Trends and it like extracts search charts, and it sees if there's any anomalies. It
Makes
goes on
sense.
TikTok and looks at comments. It does all the stuff that I'm talking about.
Just on scale.
On scale, it does.
Wow.
Okay, is it perfect? No, but it's something that an individual in our community and Jordan have been working on for a long time and putting a lot of work on. And it's something that we're looking to release to the world. So I don't know if I can say the name of it yet, but so yes. And then also, even before that, I have been using
18 years so far. Just so happened to 18 years of bull market. You can get through a recession. I mean, you traded to like the 2008 crash, right? You say you started in 2007.
large language models just to help me as an assistant. So usually what I'll do is if I find something that's like trending, or if I find like a cult.
So the Jordy Advisor guy had a pretty interesting like, set of Gemini prompts. So what he's doing is he's taking like all these podcasts, not this one, but like moonshots, like all in any kind of podcast, any tech CEO, whether it's like Elon Musk or like Zuckerberg, so on and so forth. And he runs them all through the AI and then tells it to extract any kind of macro topics that were discussed. Then he gets a thing to build like an investment thesis around it. And then he gets it to like suggest companies that would fit this thesis going forwards. Seems pretty interesting, actually. Quite the effective way to like get some quick alpha. Remember that story about the tree and the selling seeds? Oh yeah. No, but the thing is, I don't know, it seems difficult what he's doing, especially because he's doing it via options, right? Like, what if like you say like 1 to 2 week options? What if like no one picked up on it until like 3 weeks later? You just wasted that trade essentially. The timing aspect seems quite interesting, to be honest.
Or like a change in consumer behavior. Let's say consumers start wearing a lot of denim. Like denim is in, like all of a sudden, like denim skirts are in, right? I will say to the AI, hey, denim skirts are coming back. Help me detect every company that would that's publicly traded that would both benefit from that trend
supply chain,
and be harmed by that trend. Both retail companies, brands, supply chain. So then the AI will go out and do a lot of work for me, and it will come back with a lot of suggestions. And it's just a tool. It's like, thank you. That saves me a lot of time. Now I can look at each of those companies and do my own assessment to the degree that that will actually move the needle for the company, the degree to which the market has already priced that in for that company, you know, and on.
Would you say the reason of you harnessing AI has led to one of your strongest years this year?
No, so it's really recent. The AI has kind of made what I do a little bit easier, but for the most part, I haven't really like used AI that much for discovery yet.
Okay.
So the discovery mechanism has not changed for me. It's been fairly manual. I think I mentioned to you before the interview, a lot of my discovery the last few years has come from my community. You know, I'm like I think the only YouTuber, I don't do sponsors, I don't have courses, I don't do anything, but I do extract a lot of value from my community because we, you know, the Dumb Money community, we just share ideas with each other. Like, we're just like, hey, we have this like commitment to each other. I'm going to share everything that I have with you guys. You guys share everything that you have with me. We'll all go off and do our own homework. We'll all go off and make our own decisions, and we'll poke holes in each other's thesis, right? So if you think about it, we're kind of like operating the world's largest hedge fund, like a communal hedge fund of retail traders that are we all think alike in that we're observational traders. We're all looking for change in the world. We're connecting dots, and then we're helping each other. So I would say it would be reasonable.
Community source news and excellent strategy.
Of my high conviction.
Yeah, that's what I thought was interesting in the other interview when these people were all talking about how they had like joined these like paid chat rooms. Like, what was one of them called? Like the Investors Underground. But it is true, right? Like, at the end of the day, one person can only do so much. When you have a bunch of people like scouring different corners of the globe, it kind of all comes together.
Conviction trades the last couple of years, 2-3 years, were sourced from someone in my community.
Yeah, like I did mention that. A lot of people have mentioned that. It's probably like, I don't know the exact count. But like the whole idea of having like a trading pod or being a part of some kind of trading community has probably been mentioned like 10 plus times, if not more.
The text that brought me to Sphere, like you know, like it was not me. It was someone. Now I did a lot of work once that text came through, and what I did was I pulled a lot of data, some of it proprietary data sources that I pay a lot of money for, and I shared that data back with the person that shared it with me. So I'm like, hey, here, I did a lot of research on this now. Here's what I'm doing, and here's the data that I pulled. And so I tried to help them.
When we talk about typical trading, which is you're quite contrarian to, you know, you look at the typical fundamentals, economics, geopolitical factors, then you look at the charts and look at the technicals. You are doing neither. The next portion would be risk management and following some systematic approach there. What is your philosophy towards risk?
I mean, I just don't have any, right? So like
I was being recruited to a trading firm. They had trading pods. And it's key for success. Yeah, but like what you're describing is more so for how they systemize like the business. Like, so for instance, like if you go to a bank here, there's like the commodities pod, and then there's like the large tech pod, and then there's like growth stock pod, and then each pod has like their own set of people working with them. It's like they have their own quant, their own like software engineer, their own like trader if they need a manual trader. Because if not, it gets like too convoluted, right? Like if you just have like a bunch of quants working for everybody at once, it's like chaotic. So this way, like each team operates as one, like separated from the rest. That's how most places do it. From what I'm aware, maybe some people do it differently, but
I just do this one thing, and I do it over and over and over again, right? I trade at the point of information imbalance, and I exit at the point of information parity. And if it's a high conviction trade,
diversifies risk.
I might
Do you see a hedge fund with both long and short positions? Well, I mean, it's kind of implied in the name, right? they hedge their positions. Typically, like some. The thing about it, if you're gonna make, let's say you're expecting to make, I don't know, 25% on a trade if it goes up, and your downside if you're wrong is like 10% or something. And then like a lot of people will take like 5%, like a fifth of this number, and put it towards hedging. So like if it goes up, they only make 20 instead. But then if they're wrong, they only lose like 5 kind of thing. So like if you're right, you paid like a small premium to have insurance in the position. If you're wrong, you're minimizing your losses. Dun, 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 dun.
I'd invest between 5 and as high as 30% of my total liquid portfolio in that trade. I know that sounds insane.
30%, holy shit.
That's the only way that you're going to generate these types of returns year in and year out. There's no way that you're going to return 75% annuals. You know, you can't do that if you're just have a diversified portfolio of stocks and you're taking 2-3% positions.
So, because there is a high risk, high reward approach, in amongst 17 years, why has there not been a minus 100% year, which could be a handful of losses?
So there was, I took one of the biggest losses I've ever taken. I think
you're long and short the same equity that cancels out. Yeah, if they're the exact same ratio, but they're not. At least in the thing I'm describing.
30% hit to my total portfolio on a single trade in late 2019 on a stock called Restaurant Brands. They owned, oh my God, what's the biggest Canadian food company? They're like the 7-Eleven of Canada. They
Boston Pizza?
I wouldn't know.
Or wait, Tim Hortons?
I'm from the other part of the world.
All right. Gosh, they own, I can't remember the name. They own them. They also own Popeye.
Oh, Tim Hortons.
Tim Hortons.
Yeah.
So about 50 to 60% of the company is Tim Hortons. And then they own Burger King. And then they own Popeyes. And I had a dual thesis that both Popeyes, because of the crispy chicken sandwich that they had come out with, and Burger King, because it was like the Impossible Whopper, that happened at the same time, were both about to have the biggest quarter in the history of their companies. And I did so much research on this. And I went all in on Restaurant Brands, like all in on a massive options trade that was going to play out on earnings. And I was only able to do a limited amount of research on Tim Hortons. It's a Canadian company. Not a lot of people speak about the company on social media. There was just really no strong data source that was able to get me anything insightful on the company. The company had been kind of floundering, going sideways for a while.
I mean, it's just like
the assumption that it was going to be another regular quarter for them. Maybe they'd be up a little, maybe they'd be down a little. It wouldn't really matter because 2 of the 3 parts of this company were about to have the biggest quarters in history. Well, sure enough, Tim Hortons ended up having the most devastating quarter in the history.
Really?
Devastating.
When is this?
Even though I was completely right about Burger King and Popeyes, they both had the best. At 60% of company revenue, Wall Street was mostly focused on Tim Hortons. And it's not like the company went down that much, but it went down enough on earnings that it wiped out the entire trade. So there was a franchisee conference for Tim Hortons that was happening in Florida 2 weeks before earnings. And I later found out from someone that was at that show that if I would have done a little bit more research and flown to Florida and just hung out in the hotel bar where all those franchisees were, I would have 100% had access to what was going on that quarter, because they were all really pissed off, really upset, and basically went to war with the company at that conference because their sales were down. They didn't like a lot of things that were happening. And you see, I didn't do my job to the extent that I should have done my job. And I learned a really hard lesson. You know, that was the one trade that I've had that I could think of in 17 years that I actually put me into, like, I'll call it like a very short little trading depression. Like I basically, I was so devastated because in my mind, I was so mentally prepared to have this like slam dunk of a trade. I'd already calculated in my head how much money I was going to make on that trade. Not only did that not happen, but I got completely wiped out. Like a third of my liquid net worth evaporated
in one mistake or one idea.
One idea. 3 days, I didn't want to think about the stock market. I didn't open up my portfolio. I was just like down and out. And then I like pulled myself up again. And I said, come on, man. It's like one trade. And then when I realized the mistake I had made, I was like, listen, I made a mistake. You know, that's on me, but I knew what I did wrong. Sometimes it's not a mistake that you make. It's information that you had no way to know. It's just part of the unknown. And you have to take that into account, that this could happen on any single trade. But what upset me is I did have the control over this one and I missed it. So
how did that, what was your behavior like after, in terms of, did you change anything, or your psychology in general?
I generally slowed down a little bit after that. I mean, you take that big of a hit, you're going to be a little bit less aggressive, right? But then the pandemic hit. And I had been waiting for, I'm all about black swan anomalies, because black swan anomalies are the biggest opportunities as a trader you'll ever get to make, you know, like lifetime money in a short period of time. So, you know, I won't go over the whole story because I've told it a million times, but, you know, I was, you know, utilizing, you know, language interpretation tools to interpret all the Chinese reports on, you know, coronavirus, and, you know, scientists and doctors and what was happening. And I knew that there was a pandemic about to kind of completely take over the world. And it was just so obvious to me, as it should have been to anyone, but the Wall Street just refused to see it. So I ended up going all in on that trade, which is really scary after losing that much money.
Right.
I went all in on that trade at an equivalent level. So I really put it on the line. It was scary. And it hit, obviously. So 2020 was the #1 trading year I've ever had. You know,
A lot of people did, man. Feels bad.
It was
Feels bad.
Made everything for me, because there was so much change happening in the world, for work from home, and the more change, the more opportunity for an observational investor. I mean, when people change their buying habits, if you can get ahead of what those are and trade those stocks, which is exactly what I did. Bicycle companies, boating companies, you know, pets, this. I mean, just all this stuff, right? Peloton, you know, it's just all this obvious stuff. Shopify, Amazon. So I made it all, and that felt really good. It felt really good coming off of the worst mistake I had ever made as a trader to the best trade I ever made as a trade. And the fact that I was willing to put it all on the line again, I cannot tell you how hard that was, especially because it didn't work right away. I was buying weekly options and the market wasn't moving, and I was losing all of my money to the tune of like almost 10% of my portfolio every week. So I kind of already did lose, I think, almost another 30% of my portfolio before it hit. And then when it hit, it was unreal.
I've spoken to a variety of guests on the show.
Risky. This guy's risky, we'll say that.
On data and actually knowing the inner workings and the insights of your edge.
Like a few more of those trades didn't work out.
The number is powered by Arctic TradeZeller. So the my TradeZeller for you have, because if you tomorrow. So despite your anomaly performance, in the end you are a human. And I want to speak to the emotions you have, because if you go from a catastrophe, and that can easily cause a fight or flight response, to then having the discipline to take a high conviction play, and then the euphoria that maybe follows.
Gambling. I mean, a bit, I suppose.
We're talking about a yo-yo, and mixed with fear, greed, overconfidence. Like, it's a whirlwind, it seems like, in a short amount of time. What was your headspace like, and how did you keep it grounded or objective?
I didn't. Short answer is I didn't. You know, that just happened to happen during a very unusual time for everybody. You know, COVID, world pandemic. So I think my headspace, like every other human, was radically weirded out during that time, as is. I was flush with all this newfound capital, and I don't want to use the word bored, but we're literally locked in our house for a year. And, you know, you get that big of a hit and you want to recreate it, and you think you can, and you get caught up in stuff. I did get caught up in NFTs for a while. It was just fun. Quite honestly, it was a cultural movement. I had a lot of fun with it. I actually, weirdly, even going through the whole cycle, I ended up doing pretty good.
On NFTs.
Yeah, on NFTs.
One of the few maybe that did.
Well, I mean, pretty good. When I say pretty good, like nominally good. Not nearly as good as where I was at the top of that market. But the issue with that is that I missed a huge window, which was the downdraft of the market post that market boom. And I had a lot of floundering big equity positions that I just wasn't paying attention to. So not only did I stay in some of those positions too long, which went against my methodology because I was distracted by something different that was keeping me up 24 hours a day. I was having fun with trading these stupid.
Remember, your Million Monkeys a typewriter? Yeah, I don't think this applies to someone that's 20-year career, right?
But beyond that, I missed that huge window where if I was on my game, I could have made an equivalent amount of money on the way down. Right? So it was the opportunity cost was massive. And I just thinking about how much money I left on the table because how distracted my headspace was during that time, lesson learned. We're human, like you said, and it was a weird time. We were all kind of messed up.
You understand the idiom. Yeah, one of them's bound to write something useful. The thing is, your analogy only applies if this guy hits one trade. The rest are garbage. Whereas he has an entire career, 20 plus years basically, of constantly doing trades. If you think that's how that works, then so be it.
In weird different ways that we could only appreciate if we look in the rear view now, right? Like, well, who was I? I was up at 5 a.m. talking about, images of cats, saying trading for $40,000 a piece in Discord channels with a bunch of random people around the world. It was weird.
What are these things worth now?
Okay.
So actually, let's draw a parallel because maybe that NFT bubble, let's call it, is over. But the meme coin world is as ripe as it's ever been, and maybe they.
What was the main one? It was like the monkeys, right? Oh, yeah, Bored Ape. There we go. Bored Ape. The lowest one is 5 ETH. $15,000. Interesting. Oh, that's one. CryptoPunks 28 ETH. Damn. Can't say if I was ever into NFTs, but it'd be interesting to see if these things end up making some like huge comeback.
Try to do something similar too, where they tap into community, they're tapping into memes, they're tapping into culture on the internet, and then trying to capitalize on it. Social arbitrage, kind of.
It is. I'll say this. I spend a lot of time with people that are deep in crypto. I spend a lot of time with crypto whales. I spend a lot of time with people that are deep in the meme community as well. I think for a lot of retail traders that are in that world, I think they're in that world because they don't have the confidence that they can be super successful trading equities for some reason. Going back to the same thing, right? It's like Wall Street, it's rigged against us, blah, blah, blah. And I'm telling them, no, it's not. In fact, when it comes to, meme stocks or it comes to, meme coins, that world's pretty rigged, right? And so I was like, if you're able to like fast trade that world, you'd probably do really well in equities because my competition in equities is horrible. They're terrible. Like I don't have the competition. You're trying to trade meme coins. You're competing against really young, really sharp, really aggressive coders and people that are deep inside that are not having to really play by regulatory rules.
Deep in the trenches.
It is really hard to like win over and over and over again in that world. So like, I don't want to play in that world because like, why would I? The competition is stiff. The competition in trading equities, it's nothing.
Would you say also a meme coin has no intrinsic value, so it can very easily turn into a pump and dump and go to zero, whereas it's unlikely a company that is publicly listed will go to zero. Is that
sure,
something?
but like, you gotta remember the way that I invest as an observational trader, it doesn't need to go to zero for me to lose all my money. So I just need to like be wrong 5 times in a row to lose all my money. Right, so like
as you've scaled towards 8 figures and beyond, have you not thought let me increase the amount of losses I can take so it's not 5 losses to wipe out 2 decades of work?
Okay, well you have to remember what's my objective. Remember when I shared with you my objective, it's not to just do okay every year. It's like I'm going for something really big, and I'm not doing that out of pride or like because I want to be a billionaire. This is for a cause, right? Like I want to do something really, really big for others because I can. So like, I would carry a lot of guilt if I just retired and hung out. You know what I'm saying? And just like lived an easy life the next 25 years. Because as long as I'm capable to generate outsized returns in the market and potentially do something really great for those that are not in my position, or were never born into my position, or are in places in their life where due to a medical issue or where they live or their education level or any number of things, they're kind of stuck. Like if I could help people like that,
It doesn't answer any of his question, right? The guy asked him, why don't you like risk manage a little differently so you're not at risk of blowing up? This guy just goes on this whole fucking rant.
I feel like I inherently like need to do that.
From the movie The Matrix, where you have the girl in the red dress, I'm sure in your stage now you have many girls in the red dress, where it's like people want to throw capital at you and make a hedge fund or go the professional route, or the social media sphere that you're in, where you've generated millions of views, you have an online presence, you're an author, so you could obviously you can monetize your brand. So there's all these external opportunities towards your edge and just doing what you're doing. Why choose to continue on this path as opposed to monetize your brand or take on external capital?
And there's another piece that we hadn't discussed yet, which has been really detrimental to my ability to build wealth over the past 17 years, which is that almost every year for the past 17 years, I have pulled the majority of profits out of my account after paying taxes and bills, and invested in private markets. So, you know, I'm invested in almost like 160 companies over the past 17 years, privates. Okay. And I would say that my returns as a venture investor are probably on par with most other venture investors, meaning it's just like run-of-the-mill returns, like normal, average. Not bad by any means, but certainly nothing that comes even remotely close to the 70% annualized returns that I get in public markets. So that has been a critical mistake for me. And it's something that I've learned, and over the past 3 years, I've been pulling. It takes a long time to not invest in startups, because when you're working with 100 plus founders and you get 50 emails a day from people that want to meet and have you invest in their company, it takes a long time to withdraw out of that ecosystem, and I'm finally out of it. It took me 3 years.
So why even enter? Because your competitive edge is in the public sphere of...
Boom. You nailed it. Like, because I thought I can do it all. I thought, like, I've been, you know, half of my life has been as an investor, but the other half is I'm an early stage operator. I basically built companies, grown them, sold them. So it's very addictive. It's hard to leave that space. I love building. I love being around builders. I love being part of that. And so I still do that a little bit, but like with one company at a time, as opposed to just being a VC investor for myself. So I pulled out of that world. But the reason why
I think this guy owns like a pretty famous restaurant in Texas. Chelsea Corner. It might even be two of them.
I've been going through like this period.
0 Day Mark, who's that?
You know, like I'm old now, and like I have X number of decades hopefully left, and how do I want to use them? And so I have a pretty clear vision of what I want to achieve. And for me, it's primarily quality time with my family first, and then trading, right? And then, you know, the YouTube stuff for me is a joy. It's something I do with my friends. It's something I do because I want to encourage other people to be part of the
Mark Andron
investor class. You know, I want to bridge every human in the world to the investor class. It's not something that I need to build a content empire. You know, I don't generate money from my content. So for me, it's a fun, enjoyable thing, and I want it to remain an enjoyable thing. That every time I get in front of the camera, I have something interesting that I want to share with people. So it's all about doing less. I love the fact that everything that I'm doing, I could be anywhere in the world, including at my kids' volleyball game or a football game at halftime, and I could be doing it on this. You know, it's like I don't have a big room of screens and stuff. Like all of my trades are on this.
Literally, with social media.
I'm trading on this phone. Almost all my research is on this phone, and all my trades are on this phone.
What does your screen time look like?
A lot. It's crazy. And it's like I said, I do most of my research
on Tasty Trade.
Hours of TikTok comments a day.
No clue, never heard of him. Seems like a nobody. in the sense of like, I mean, if this is his actual Twitter, I don't know. But if it is, not like a single person I know follows this guy. And I follow like fucking a shit ton of people. We'll give him a follow and see what he throws on the timeline. Also, his website's terrible. Doesn't even function properly.
You know, I do a little bit on my laptop, but for the most part, I have absolute independence in my life to be able to be at every single game that my kid. I have 15-year-old twins. Every single game they're at, I'm there for the most part. Every single one. I can do all the vacations. I can be present if I want to be. You know, like I can do all that family stuff. And to me, that's super, super important. Like just personally, that's what I want. So, you know, that and trading is really all that I need. I don't need any of the other stuff.
When you started to generate significant amount of money, how did you interact with the idea of lifestyle inflation or chasing the materialism and hedonism?
Yeah, I mean, I was really fortunate to grow up in a really affluent community, one of the most affluent communities in the world.
Yeah, that is the
when I was a
website.
child here in New York, and then which was Great Neck, Long Island. And then as a teenager, when I moved to Texas,
Like any tab you click on just brings up like the accredited investor tab. You can't even like browse the website.
University Park in Dallas, Texas. And so, you know, wealth is not a new thing for me. And that's like a huge advantage in that early in my life, I was able to like be around enough of it that it wasn't this obscure thing that I was reaching for.
Okay.
It was like, I'm around it. I know the good, the bad, the ugly. And I was able to get a...
Seems kind of pointless, right? Like what
I went through
if I want to know
ambitious young kid.
stuff before like contacting them? I don't want to give them my info
I
randomly.
was really young, all materialistic stuff. And I quickly realized that that's just not for me. It's just not for me. I mean, don't get me wrong. Like I have a really nice house. I get to go on really nice vacations with my family, and you know, I don't ever have to think about money when it comes to like, can we afford the dinner, or like, can I send my kid to camp? Like that's a super great place to be in life. But I truly, for me at least, it's a more money, more things, more problems. That's my personality. I don't want anything. I think it was about 12 years ago, when I told a bunch of people that were close to me, I was like, I just realized like I'm done. Like I have everything. Like I don't want anything. Like literally nothing. There's nothing that I don't have that I want. I don't want a yacht. I don't want a plane. I don't want like nicer clothes. I don't want a car. I'm done for the rest of my life. So everything from this point forward is towards achieving some mission that is for something else. You know, like it could be for my family, it could be for like charity, it could be for something else. And that is so freeing, because once you get to that point, it's like you get to like revert back into appreciating the simple things in life. So every day I have coffee with my dog. And it sounds so dumb, but like there's the same coffee shop that I go to every day, and my dog has her breakfast with me sitting at my side. I have coffee, and all these people from my neighborhood, a lot of them just know me from the coffee shop. Some of them know me from YouTube. I'm friends with the people that work the coffee shop. It's kind of like the equivalent of sitting on the front porch in Manhattan back 50, 60 years ago and seeing the neighborhood go by. Like I do some equity stuff, some equity research on my phone, you know, like I'm just catching the day, but like I do that 7 days a week, right? So like I have my family time, and then that's like my connecting with community time, right? And I can do that because I don't have a job and I don't have YouTube advertisers to answer calls from. Like it's amazing. I could do that every day, and there's never a time when I don't do that, and it brings me so much joy that every day I'm like, how fortunate am I that I get to do this? Like on a nice day, a crisp morning, just walking the neighborhood in a beautiful, safe neighborhood. Like that to me, like that's the end goal. I've already hit it.
It's a very beautiful topic, and I want to start off by saying this idea of peace and presence. They say that people are slave to their desires, so the ability to remove your desires or not have desires and truly be present with whatever you have around you is a huge skill. the average viewer watching is probably at their 1 to 3 year mark in their trading career, and they are guided by people they watch online, which is obviously going to be the heavy materialistic and the flashy lifestyle people, and that's what they look up to and chase. So having a figure like yourself that is speaking the complete opposite, I want you to extend that advice of maybe what they are chasing and
I want to be really careful, because I know that a lot of people hear me saying this and immediately say it's really easy to say that when you've already gotten to have everything you wanted and realize that wasn't for you. Like, because everybody,
Okay.
I feel like sometimes we need to have the optionality to have all the stuff and maybe get some of that stuff to then hopefully, and not everybody realizes it, but I think more than not, a lot of people realize, because I've been with people that get all the stuff and then don't realize it, and they get more, and then they start spiraling in weird world, like we right? Like
Yes.
it could be drugs, it could be all types of partying and infidelity and all the stuff that comes with just
Yep.
what do you do next when you have everything? You get yourself in trouble. But sometimes you need to have the optionality to have that stuff and play around with it a little bit. Maybe you get the car you always dreamed of, right? Maybe you go on a private jet once or twice. Like when I went on a private jet was the only time I ever did it, for the most part, like that I paid for it, was during COVID, to see my family. My parents, I didn't want to get my family sick, and I didn't want to get my wife's family sick. So we did one private jet trip to New York and one to LA to see my wife's family. And I'll never forget it. And I've been on a few private jets with other people that invite me and stuff since then. But to me, like, it's worth like an extra few $100. I know people think I'm nuts when I say
get your point.
I'm like, is it slightly better than traveling commercial? To me, it's slightly better, but I don't understand it. I'm like, the price point of it is so insane to me.
especially in the US.
I'm like, I fly Southwest and I love it. And it's like, but my expectations are like reasonable too. Like, I'm just like, I'm on a plane for 3 hours, right?
you also
Like,
can pass the time doing some productive
yeah,
research.
I put my headphones on. I'm in my own world. It's a baby screaming next to me. I don't hear the baby. I got my headphones on. You know, like, could the seat be a little more comfortable? I don't even fly first class. You know, I'm like, I feel guilty paying for that. Well, they don't have it on Southwest, first of all. But I don't know, man. There's something about simplicity that if you can get to that point, for people, I want to get back to sharing this with anyone that's watching. If you're fortunate enough in life to ever get to that point where you can go through the materialistic stage and get out the other side, the simplicity is gold. It is a level of enjoyment, for me at least. It's a level of joy and peace that I never thought was actually even out there in the world to get. That's how good it is. It's so much better than being on $1 billion yacht, or because I've done all that stuff too, right? Through other people. And I'm like, no, dude, just the good cup of coffee with my dog and walking
beauty
and
in that.
seeing people from the neighborhood. And when my son calls me and he's like, Dad, can you bring me here? I'm like, yeah, I can be anywhere,
Yes.
whenever I want, right? Like, that is what it's all about, for me at least. And I know it's different for every person, but all I want people to know is, don't discount that life. Just when you make the big money, because hopefully everybody watching will eventually make that big money, just know that there's two paths. And you could go down the other one to try it out, but there is this other path that, at least for me, and I know a lot of other people, because I engage with other people that have been through the cycle that ended up in the same place as me, and we talk about this. That path is actually a whole nother level of dopamine that you can't even mentally process until you get there.
Wow.
Because it's like a peaceful dopamine, and it's like an internalized peace that is so awesome, because you're not chasing anymore.
I think
There's
it's
nothing
also-
left to chase.
There's also a difference between peace and pleasure, and dopamine is pleasure, temporary highs, whereas peace is everlasting. It's not a chemical; it's a presence or a fulfillment.
Yeah, but if you change your mindset, I know this sounds weird, you could actually get the dopamine from the peace. It's like, it's a change of mindset, because when that's the thing you're chasing and then it's just there every day for you, and it's like, it's so real,
Cool.
it's really awesome.
I finally have a special offer to share with all of you from the US or my futures traders, which is over 20% of the trade profile. Go ahead.
True.
So
True.
a lot of these guys have heard your story and they're fascinated and they're very curious on how I can do the same or how I can explore this. Where would you navigate them to begin learning about social arbitrage?
Number one thing, bucket your money. I talk about this
Okay.
in my book, Laughing at Wall Street. I think when my publisher sells one of my books, I make like 28 cents. So this is not monetizing for me. But Laughing at Wall Street is my 2010 book. Unknown Market Wizards, the new edition, is awesome. And there's a chapter on my methodology. It's really rigid. But I would say for most people, learn how to bucket your money and start watching great financial content creators. And do not copy them. Do not mirror trade. Never tried to mirror trade me or anyone else. Don't just try to replicate them, but use me and all of them for their ideas. Use everyone for their ideas. Use everyone for their due diligence, but always combine that with your own thoughts, your own due diligence, your own style, right? Like, you have to learn for yourself. You just have to.
Yes.
But it's totally fine to like draft on other people that have been hyper successful. But I'll tell you this, like, if it were me, I read every investment book when I was a kid. All of them. Like, no joke. I read all of the investment books. I would only pay attention to people who are personally super successful themselves. That doesn't necessarily mean that they're going to continue to be successful. So don't copy what they're doing, okay? But it's a better start than starting with someone who hasn't even been successful with themselves, right? So follow a dozen people religiously, listen to everything they have to say, but don't copy them. Just use them. Like, I talk about almost everything that I do on X and on YouTube.
Okay.
And then the clips go out on TikTok, Instagram, all the stuff, all the dumb money. Dumbmoney.tv is all the socials, right? Just go to dumbmoney.tv. But use that as reference material. If we talk about a trade, don't just do it. Be like, okay, this is what Chris is doing. Let me try to poke holes in that.
Yes.
Let me see if he was right or wrong. Let me see if I could prove him wrong. And by the way, if I have a trade that I talk about and you find something that I didn't realize, please DM me and show me where I was wrong, because I literally want to know.
Yes.
I mean, I'm not like, I make mistakes constantly, and people in my community are like, hey, Chris, did you know this? I'm like, well, now I do, thank you. You know, like.
No, it's interesting. You said you tap into your community as part of your process now. So it's give and take on both ends.
And you're not alone. I mean, I think that's the big thing. Like, you know, so my community, whatever, like Dumb Money, just be part of a community, you know, that makes sense for you. I don't do technical trading. I don't do fundamental trading. Maybe that's for you. There's tons of amazing technical traders. I would rather shoot myself than to have to look at a bunch of screens and charts all day. If that's not for you, maybe the way I do it is for you, right? Because I cannot imagine that technical trading, because that historically, the majority of retail traders have been technical traders. I cannot imagine that appeals to more than 2% of normal people.
True.
And fundamental trading,
Gotta be a little on the spectrum.
than the guy that went to Wharton and has been doing this for his career. Do you really want to out-edge that person on the fact that the PE should be 13 instead of 14? You know, like, that seems really ridiculous to me. So it's probably, for most people, the right path is probably just trying to detect change in the world a little bit quicker than you know, the suits on Wall Street, and connect the dots a little bit quicker and get in on the next big thing.
Chris, a fascinating episode, especially because it was kind of semi against technicals, against risk.
Interesting.
Seven-figure verified professional money manager in the UK trading Forex.
One of the things I've noticed working with other traders, that they don't often have a process to it. There's a guesswork in terms of what they do. So I have a process called, if you're a trader that is trying to use one of these, but can I use these 3 tools to determine what condition that market is in, and then use various filters to then look for potential trade. One thing I did want to cover, and again, this is where I see a lot of...
Actually, let me get food first. Let me get some food first. We'll get back on the bullshit.
She bounced once, he pressed twice, stop, gone. Marcos. Yeah, I got them, no chase, no stress. Stock got tapped, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, market did the rest. You got, now you tweets and regrets. I sip slow, I collect these sets. You on hype, I want that depth. I don't blink, I prep then step. Late night zone, marked in gold. Candle touch, then story fold. You said breakout, I said trap. Price came back, you took that slap. Watch your chart all full of lines. None of them real, none of them mine. Mine just sit, breathe like silk. yours just scream, mine just built. They press green, I press calm. They want rush, I want charm. They want loud, I want plan. You want moon, I hold land. Yeah, I got them, no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, market did the rest. You got, now you tweets and regrets. I sip slow, I collect these sets. You want hype, I want that depth. I don't blink, I prep then step. Price dance wild, I don't flinch. You felt FOMO, I felt inch. Entry slow, exit rich. You saw wick, I saw switch. You want flash, I want rhythm. You want now, I plot with wisdom. They rush in, they don't survive. I plant lines, mine come alive. POC shift, I lean back. Value area high, I time that trap. They got hit, full size drop. I didn't speak, I just watch. You don't see it when it's quiet. You only feel it when it break. Me, I move like a shadow. Do you move when it shake? Yeah, I got them, no chase, no stress. Stop, got tap, now they clean that mess. Didn't say much, I don't need to guess. Just place that level, market did the rest. You got. That's what happened when you rush. You got. I just faded with a hush. I stay ready. You stay loud. You caught feeling. I caught feels. Marcos.
Yeah. It's hot in here. Not from the sun. From these stop-loss fires. Marcos. Hey. Heat map red, I step in cold. Zone get tagged, then it explode. Chart too clean, wrist too froze. You long high, now your bag got sold. TP hit, I don't even flinch. Price got loud, I ain't moving inch. Wick came back, I dropped that pin. Now you stop loss, paying my rent. I don't chase no spike, I trap it. Draw that fib 618, I map it. She said you sleep while it ran, I laugh. Woke up, TP got smacked, just magic. Porsche move clean when the levels align. You throw darts, I draw with spine. He stick blow when the stop loss line. You press buy, I press decline. Top floor view while the haters trip. They scalp noise, I took that flip. Richard Mill ticket, like price on script. He said uptrend, I said don't slip. Heat map red, I step in cold. Zone get tagged, then it explode. Chart too clean, wrist too froze. You long high, now your bag got sold. TP hit, I don't even flinch. Price got loud, I ain't moving inch. Wick came back, I dropped that pin. Now you stop loss, paying my rent.
Cookies in the wood, gusher strain. Chart did numbers, I ain't feel pain. He up $5, I blew out range. One big zone, now we ain't the same. Bentley slide with the VWAP mark. Chart bounced back like a go-kart spark. He said mad fake, then the fib went dark. Then came Wick, then came Spark. AP face match chart precision. I don't need hype, I need incision. They want vibes, I want conviction. He post losses, I post liquidation.
Heat map red, I step in cold. Zone get tagged, then it explode. Chart too clean, wrist too froze. You long high, now your bag got sold. TP hit, I don't even flinch. Price got loud, I ain't moving inch. Wick came back, I dropped that pin. Now you stop loss, paying my rent. Marcos. He said he felt heat. I said that's the pressure of math. You don't feel it when you fade it right. Heat map. Marcos.
They said I'm lost in lines, but they bounce right there again.
This trade for toddlers. Fizz hit like it's silence. Licks don't lie, they righteous. Chart too clear, it's guidance. I don't chase moves, I glide 'em. Prices on, I light it. They draw hope, I ride it. She asked how. I said, the math this time is price at the 618 like fade. You long the high too late. Woke up in Bali off game. Smoking loud with a chart on a plate. Villa pool view with the VWAP tags. Imaginary line, nah, that's fact. Zone got filled, they gas. Why just laugh, refresh, relax. Red box, hot liquidation wave. She see charts and call it brave. But I ain't brave, I'm patient made. I let math carve passing waves. This trade feel timeless. Flips that light, it's silence. Dicks don't lie, they righteous. Chart too clear, it's guidance. Don't chase moves like gliders. Prices on, I light it. They draw hope, I ride it. She asked how. I said, the math is timeless. I set size, then float. Watch them sweat while I coast. You trade loud, I'm ghost. Bali breeze, Silk Road. Palm trees, screen glow. Wick, then go. She asked if it's luck, I said no. Every level drawn, slow, go. Then blow. I feel price, top no cap. It kissed line and snap. She said you cold, I laugh. It's just math, just math.
Timeless mind, say physical stops when I go. Math is the code.
Marcos.
Wig tapper stop, snatch your lines, hit clean, no chatter. You chased high, I stagger, then fade the move, no swagger. Flash that green, then vanish, stop, run, math, not magic. Every trap you panic while I move, cold and manic. Dash line, float in the void, yellow glow, they get destroyed. No alerts, I just deploy. Trigger wick, then void the noise. No hype zone, I'm centerfold. Mid-chart masked in silent gold. Fake out highs, I never fold. Just load the fade position code. Price, hit that line, pixel fit. You call breakout, I call quit. Back to mean, I see the script. You see green, then I dip by. Then I dip by. Come on.
Yeah.
Wig, tapper, stop, snatch your lines, hit clean, no chatter. You chased high, I stagger, lag, then fade the move, no swagger. Flash that green, then vanish, stop, run, math, not magic. Every trap you panic while I move, cold and manic. I see.
I'm not ordering. Nothing. I just got fruit, yogurt, almond butter, banana, a protein bar. But just a bunch of food at home.
Alistair Crooks joins Chart Fanatic. In this episode, Alistair goes through his exact simple trading strategy that he uses to swing trade Forex.
This is the challenge when you're trading. A lot of people call them strategies, but actually they're just a set of entry criteria. They're not actually a full strategy. And that's what they end up doing. Yourself, more appropriate to go against the trend. And it's the old adage, people say, oh, trading against the trend is risky. Well, it's only risky if you're...
Alistair walks through his exact entry process, trade management, and how to exit correctly.
You'll notice here that price creates the low at this point, and now we're looking for price to come back up and test the moving average. What you'll notice is price comes back up, and it actually does a higher low prior to coming in. And again, that makes traders nervous, but data over drama. One of the things that's nice about trading a trendline break setup is you can allow for price to push above the level. Obviously, what we don't want to do is be just trading a break of any trend line anywhere. So the rule that
Nobody's using Copilot. It seems like multiple days old. December 10th, supposed to be the 15th. Yeah, I mean, I don't really know who uses Copilot, to be honest. Aside from like coding. At least I don't use it.
We have in this scenario is
Welcome back, everyone, to Chart Fanatics, the go-to channel for all of the very best strategy breakdowns and concept breakdowns from the very best traders in the world. And today, we are joined by the one and only Alistair Crooks, who is a verified seven-figure trader and wealth experience. 2 decades of experience.
yeah, 2.5 now.
2.5. I love it. And we're going to go straight into it. So we've got some strategy to break down today. Where do you want to start?
I think I'll give you a quick history, a quick brief breakdown of where this came from. So I was 13 years as a day trader.
Wow.
And one of the things that I used to love trading a specific setup. I used to call it, otherwise known as a fade play. So what would happen is if you had a decent run all day and you had a scenario where you've done about 150% of ATR, so the market was essentially extended on the day, you were coming into decent levels, what I would do is I would fade that move overnight. So I'd trade against that trend, hold the position overnight, and then exit in the morning prior to the next day. So it was something I did for a long while. And then once I started doing more swing trading and more people came to me wanting to swing trade rather than day trade, I was like, how can I take that concept and bring that into a swing trading scenario? So I thought what I would do today is break that process down, where the process comes from, and just go through some of the hurdles that people face when they go through something like that. Yeah.
I love that. Sounds great.
Good. So what I think the starting point is the idea, it's a really simple concept, is the idea of what I call the sideways principle. So keeping it very simple, markets are spending a lot of time in a sideways move. So you're creating areas of resistance up here and areas of support down here. And then obviously there'll be times when markets will break that area and go higher. So what I'm looking to do when I'm looking at any market is to determine where it is in this process. Is it what we call free? So is the market free of any immediate support and resistance, or is it working in between those areas? So the idea that I had is how can I define specific areas within that move? Now, as many of your listeners will know, most markets aren't looking like this. An upward move will have periods of consolidation. It'll even consolidate at levels. It will move down quickly. It will move up, consolidate here. So the idea is that a move would look more like that. It's much more complex. So rather than simply just saying, well, I'm going to trade short up at areas of resistance and trade long at areas of support, how do I factor in that during a sideways move, there's a choppy area, there's a consolidation, there's a breakout, there's all these different things going on within that sideways move. So the idea was we would create what I call a discretionary analysis process. So what tools can I use that I can use repeatedly over and over again to then define what we call a specific market condition? So what tools will give me the certain conditions? So I'll go through these in a bit more detail, but essentially support resistance is the first one. Second one, trend lines. Third one, momentum. And then what I would say they're the key ones that I would use. And then on top of that, what I would call filters. So things like divergence.
Yeah.
So is the market diverging at certain points? And then other things like sentiment. So if you're a trader that is trying to use one of these, the problem there usually means you haven't necessarily got a system up there. So a lot of people dive in and think, right, I want to learn about divergence or I want to learn about sentiment. But it's like anything. You can use divergence and sentiment anywhere, but it might be less effective. So the idea is, first of all, I'm going to go through these in a second, but can I use these three tools to determine what condition that market is in and then use various filters to then look for potential trades?
No, I love that. I love that. And as you said about the sentiment divergence, is positioning, where you're actually positioned in the market, where that really starts to take a hold and be more prevalent and important.
Yeah. So let's look at support and resistance. Now, you know, I'm a bit of a dinosaur, so I still call it support and resistance. There's all these other words, liquidity. You know, I've had a bit of stick online for saying, oh, you know, why not just call it support and resistance? But, you know, if you want to call it liquidity or your supply and demand zones, fine. But one of the things I've noticed working with other traders is that they don't often have a process to it. There's a guesswork in terms of what they do. So I have a process called what I call the frequency and proximity method. So when I'm looking at a chart, and we'll just do a random chart like this. If I'm looking at a chart like this, I can see that I've got an area of resistance up here. I've got an area of support down here, and I've got a potential area of resistance here. So when I'm looking at this, what I'm looking at is I'm looking at the frequency in terms of how often prices reach that level. and I'm looking at the proximity. And basically what that means is what has happened most recently. So in this scenario, it's nice and simple. I've got 2 high hits here, and I've got 3 here. So as far as I'm concerned, I would define those as what I call key levels.
Yes.
Now, again, relative to different time frames, when I look at that, I say they're key levels because at the moment I've got frequency and proximity. What has happened most recently? 2 hits high and nothing else happening there. 3 hits low, nothing else happening there. Whereas in here, not only am I a little bit more mid relative to the range, if I look at what's happening prior to this move here, what's happened most recently? I've got 1 hit, and then what I look at further back, what have I got? Price breaking that level.
Yes.
So if I'm looking at that, I'm going to evaluate those levels differently. So if I'm looking at the hits up here, the key level at the top and the key level at the bottom, I am far more likely to make a decision about trading counter trend
Yes.
there or there. Whereas here, I'm not. Now, it might be that price does turn and go that way, but I'm not going to be as aggressive at this point because I don't have as much backing it up.
Yeah.
And the
It's a
market,
lower probability.
yeah, and the market isn't as extended relative to those two. So what I'm trying to do is, so when I'm looking at any chart, is I'm saying, right, I'm just going to go through and go, is there a level, there is a level, there is a level there. I'm going to look for what I call the key levels, which have a combination of frequency and proximity.
Yes.
Now, this is part of what I was just saying earlier, which is my discretionary analysis process. So there's an element of discretion to this. But the more you can make this systematic, the more you can measure it. And like you just said, the more you can generate an element of probability to your analysis rather than just probability around your simple entries and exits. So that's a summary of the
No, I really
system
enjoyed it.
set.
It's so clear in terms of because this element here I think is so important because I think a lot of people don't look left as often as they probably should.
Yeah.
Because they will see a little bit of resistance probably on a lower time frame, no doubt as well.
Yeah.
That's just happened recently, but not taking into account actually that same level that you're looking at has been disrespected and not really even treated as support resistance or a key level or any of those terms. Literally just maybe I don't know, 10, 15 candles to the left.
Yes.
Yeah.
Yeah, and what happens is, and this is the challenge when you're trading, a lot of people call them strategies, but actually they're just a set of entry criteria.
Yeah.
They're not actually a full strategy. And that's what they end up doing, is they'll hyper-focus in on what's happening here and then wonder why. So to rephrase it, you might say, well, hang on a minute, Ali, how do you know that price won't do that? Well, I don't, but I'm going to make that decision up front and say, no counter trend trades here. Price has got to prove itself before I'll do anything. Whereas up here, I'm willing to be that bit more risky. Now, trade by trade, you might not actually notice any difference, but when you've got 150, 200, 300 trades that tell you that when that market is in a more extended position, it's more appropriate to go against the trend, great. And it's the old adage, people say, oh, trading against the trend is risky. Well, it's only risky if you're piling in as price is in a momentum phase. And I think that's where a lot of people go wrong when they try and trade counter trend. They're not looking at looking at the market.
True. Right. That's my favorite trade. Downward trend trading, it's the best kind of trade.
So that's
going to get the most juicy moves, right? 'Cause you're getting it on the exact reversal of some massive leg the other way. Big true.
That's a bit of a brief version of how I look at support and resistance.
Yes.
The next element is trends. So I look at trend lines in 2 ways. So if I'm looking at my higher time frames, weekly, monthly, possibly the daily, then I'll use the simple analogy or the simple concept of joining up higher lows.
Yes.
Simple. Most traders listening to that will know that. However, what I will look at within the concept of our analysis process is I will look at trend lines slightly differently. So I will look and wait for what's called the price action. I call it the price action momentum point. It's the point that defines further momentum. Because again, a lot of traders are drawing trend lines on and just saying, well, I'm drawing it on because I can see a trend. But what are you actually doing with that? Are you using it to trade off? Or are you waiting for the trend line to get broken? So I look at it and say, well, in real time, at this point here, the previous high is broken. The price action momentum point has been broken. So now what I'm looking at is a trend with momentum. Now, what might happen is price pauses for a little bit and then pushes up higher.
Yeah.
So what a lot of traders will do, and there's nothing wrong with this, is they take a stance like that.
Okay.
Because they take the big picture stance, and there's nothing necessarily wrong with that. But within this discretionary analysis process that I run, I want to be able to, again, have a repeatable way of drawing trend lines. So in a scenario like that, if I get a pause or I get a series of lower highs and then price shoots off, I'm going to put more weight on that more recent trend line. You'll see why as I break down the whole process.
Okay.
So it's not that trend line isn't wrong, but I'm going to go, right, okay, price over this shorter term period, the momentum is steepened. I want to factor that in going into the next phase of what I'm doing. So the easiest way to remember it is you have an origin point on a trend. So you have the initial point. So the simple way is price is going sideways. You break that area, you come up, you come down. As soon as that first price action momentum point is broken, I've now got an origin point.
Yeah.
I've got an origin point, and then the second point is a reference point. If price continues in that fashion, comes down, trend line doesn't change. If it steepens, then I will actually, and you'll see this when you look at some of the examples I'll show you later, is I will, if price hasn't paused, I will actually cut through because I want to focus primarily on that area there. I want to focus on the most recent higher low that has created a higher high. Now, obviously you might have a scenario where price goes like this and steepens so much that if you try to use an origin point all the way down here, you're straight through.
Yeah.
But invariably, and this is just down to experience, if price steepens, there's usually a pause. So you'll have a trend that's doing this, price will pause and then offer up a steeper move. Well, if that's the case and I've had the pause, as I've just said, I'm drawing it badly, but I would focus in on that area there. So I would essentially put more weight on the most recent higher low that's creating the higher high, and obviously vice versa in the other direction.
Up to 6 million in futures funding. That's only possible at one place, Apex Trader Funding. You can get up to 20 accounts at Apex. No other futures firm offers anything even close, and that is why Apex million who did over $1.9. There's no 90 at Apex, and you can 90 get
support resistance trend lines. What I didn't mention
in futures funding today. Now let's get back to the episode.
So that's trend lines. So that's support resistance trend lines. What I didn't mention earlier.
And the reason you're going steeper, though, just before we go on, is the fact that that's the most recent move. So you're going off the most recent momentum.
Yes.
For example, if then that most recent momentum line gets broken and they end up going towards the original trend line that was positioned, are you still looking to trade off that? Or are you
no? So this is really important. As you'll see when I go through the process, part of the reason why we do this is we're not actually looking to trade off the trend line. So rather than trade off the trend line, we're looking for the trend line to be broken.
Okay.
So this is why I'm not. This is why. So a standard trend line. So if I'm looking, if you think about the original day trading strategy, you've hit the nail on the head. Because if it's steepened up overnight, well, we won't go on the premise that steeper the trend, the weaker the trend. So I don't want to have my trend line all the way down here and might get triggered in at 6 in the morning. I want to be triggered in just before market closes. So I've taken that process and applied it onto a swing trading element. Didn't assume that it would work. Obviously went away and tested it.
Of course,
So one I didn't mention was moving averages. So the reason I use moving averages is they tend to be, well, it's one of two of the entry points that I've got. So I'm using a 21 and a 50 moving average. So the reason I use those is because they were the two moving averages I used to use when I was trading momentum pullbacks as a day trader. And rather than reinvent the wheel, I just moved them over. And I remember hearing, it was ages and ages ago, it was a trader that I was listening to, and he said that whenever you get a trend line break, the retest of the 21 moving average is a high probability setup. Now, the challenge there is when traders hear that, I think, oh, great, I'm going to trade that. I was lucky enough to have enough experience going, what do they mean by high probability? So I was like, right, I'm going to go away and test it. So I think that's a really important thing to the people listening is whenever you hear someone say it's high probability, don't take my word, don't take anyone's. Go away and prove it to yourself. Yeah.
Love that.
I'm going to brush my teeth.
I've got moving average. Yeah, I've got moving averages, trend lines, support resistance. They're
interesting trader we have here. Curious to see what he's going to do. I suspect he's going to be doing like a trend line fan, right? What they're known, trend line fans. Once the steepest one breaks, probably looks to short their retest of the moving average. Something along those lines. We're about to find out, though.
Liquidity thin, so I move real slow, then price explode. Now you know. Wait out, quick, tapper, stop, snatcher. Lines hit, clean, no chatter. You chased high, I stagger. Then fade, then move, no swagger. Flash that green and vanish. Stop, run, math, not magic. Every trap you panic while I move, cold and manic. Marcos. Pixel bounce, math in motion, chalk don't lie, pure devotion. Price tap twice, that's the potion. Load that size, move explosion. Golden pocket, snipe, locked it, dash, yellow moves, echo. Pixel bounce, math in motion, chalk don't lie, pure devotion. Price tap twice, that's the potion. Load that size, move explosion. Dash lines hit like clockwork flick. Levels glow and haters trip. They call it luck, but it's just math. Snipe that zone, clear the path.
I've been trading hard, puffing loud, math in place. You still guessing wrong, I'm still ghosting every space. They chase with, I fade the high, top shelf gas, that logic fly. I'll be trading high, and they stressing low. One fill hit, now my profit broke. No love, no lie, that clean design. You panic fast, I glide with time. Luxury paranoia, I sip while you scream. I don't chase that pump, I fade that dream. Your bag too loud, your chart too green. My entry chill, my zone too clean. Smoke from the wick, I seen that fake. Mass set stall and profit break. You prayed up, I stayed mad. Now I'm cruising slow with the city black. VWAP pulled out, rotate light. Delta leaning, I fade that spike. They want thrill, I want the plan. You want rush, I want the scan. I've been trading high, puffing loud, math in place. You still guessing wrong, I'm still ghosting every space. They chase with, I fade the high, top shelf gas, that logic fly. I'll be trading high, and they stressing low. One fill hit, now my profit grow. No love, no lies, that clean design. You panic fast, I glide with time. I smoke calm, but the feels come fast. You post charts, I post that task. RS, I cooked, I fade, I follow. You trade pain, I trade hollow. You high on hope, I'm high on stats. Your move swing, I count the tracks. You call run, I call revert. You press green, I plan to hurt. TP smack and I don't react, just lean back with the logic pack. This top shelf, not just in raps. I hit zones while you collapse. You caught feeling, I caught feel. Caught smoke, I roll man. Stay loud, I stay loud, and let's win. I've been trading high, puffing loud, math in place. You still guessing wrong, I'm still ghosting every space. They chase with, I fade the high, top shelf gas, that logic fly. I'll be trading high, and they stressing low. One fill hit, now my profit grow. No luck, no lies, that clean design. Panic fast, I glide with time. No thrill, no rush, just numbers, top shelf. The math is the math, Marcos.
Price do. She said, how you know? I said, baby, the line don't lie. Marcos, yeah.
Price glide down to my level, I'm chillin'. Drawn that zone from the highest is precision. She feel the math in the way that I pivot. All clean, no cap, just vision. Golden pocket, baby, that's 618. Chalk blowing in the dark while I watch it skate. She move close like Price to my anchor. One touch now, both feel danger. I don't chase the move, I place the move. She feel that line, now she in the mood. One wick hit, I just said it smooth. Fibs alright, baby, let it groove.
Okay, okay.
She feel heat when I price a line. I draw quiet, they ask me why. I just wink.
Plus, we fill in the gap. Ooh, we're almost there. Oh, we are ascending right now, boy. 500 away. Okay. Okay. Ba-ba-boom. Okay. I think we are good to resume. I think we are Gucci. We have an alarm here, yeah? Do you believe we have an alarm on CME rates? Yeah. Cool. Boom, 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 boom. Go back to our notes.
They're essentially the key elements that I'm looking at. So what I'm trying to do when I'm using these tools, I'm going to go back to this sideways moving.
Kind of likes to yap, right? All these acronyms and whatnot. Like, bro, can you not? Can you not? Just a yapper.
Simplifying the move a little bit is I'm looking then, if I'm looking at any market, to define where we are in the move. So what areas can I consider trades? So the three conditions that I work to are against the trend, which I just put as ATT.
You know what I mean?
And then the condition I'm going to spend a lot of time talking about today is what I call the trend line break condition.
Yes.
So against the trend, probably the most aggressive. With the trend, the biggest area within that move that you can consider. Trend line break, I refer to this as the pocket. It's a little area that you can look for that is before you get into the with the trend area, but after the against the trend area.
Yes.
So if we take our simple process here, I've got my upward trend there. So price comes up, and let's assume we've established a level previously. This here, I'll draw in a different color. This would be where I would consider, not just simply trade off the level. That's not how I do it. Again, I'm not saying that's wrong, but I wouldn't do it that way personally. That's where I would consider an against the trend trade. So that area there against the trend. Once the trend line gets broken, this little area here is where I would consider a trend line break setup.
Yes.
The whole area below
becomes your with the trend.
With the trend area. Yeah. Now, again,
Interesting.
people listening will go, well, hang
Interesting.
on a minute, Ali. What about if the chart is choppy? So you've got, often when you look at sideways moving chart, you've got a choppy area in the middle.
Of course.
Okay, that's still a with the trend area, but I'm going to wait until price gets out of that way. So the idea being is, how can I essentially take a little bit less risk than getting in right at a level, a little bit more confirmation, and potentially have a trade in this area here, but over time, consider running that trade further or splitting the trade in half. So the idea being is, I don't necessarily want to get in at the resistance. I just want to wait for price to confirm that a little bit more. And what that allows me to do, it also, if we look at our previous example where I had the levels there, and then the level here, this area here, I'm going to go against the trend, but it allows me, if price proves itself at that point there, to take the trend line break in that area. Because rather than say, right, I'm going to
U.S. President Donald Trump set to make a mystery announcement and address the nation in the White House tonight at 10. Interesting. Interesting. I suspect if it was something that would impact the markets, it would have done it before futures resumed. But maybe this is why futures are floating up, perhaps. Probably not, but we'll see. So toss a little screenshot in there, right? A little screener. Up. Okay. Gonna watch the announcement? No, probably not. Probably not. I'm gonna be watching this thing.
risk going a point there to the little this little area here is where I would consider a trend line break setup.
Yes.
The whole area below
becomes your with the trend
area. Yeah. Now, again, people listening will go, well, hang on a minute, Ali. What about if the chart is choppy?
Mm-hmm.
So you've got often when you look at a sideways moving chart, you've got a choppy area in the middle.
Of course.
Okay, that's still a with the trend area, but I'm going to wait until price gets out of that way. So the idea being is, how can I essentially take a little bit less risk than getting in right at a level, a little bit more confirmation, and potentially have a trade in this area here, but over time, consider running that trade further or splitting the trade in half. So the idea being is, I don't necessarily want to get in at the resistance. I just want to wait for price to confirm that a little bit more. And what that allows me to do, it also, if we look at our previous example where I had the levels there, and then the level here, this area here, I'm going to go against the trend, but it allows me, if price proves itself at that point there, to take the trend line break in that area. Because rather than say, right, I'm going to risk going against the trend here and being unsure about whether or not that's a level, I wait for a little bit of confirmation. So by all means, I can trade the trend line break here, but it opens up other opportunities or potentially opportunities on lower time frames where the level isn't as good, but price has decided to prove itself. So what it does is it stops me going, should I, shouldn't I? Well, I know that if it's not a key level, I'm waiting for a trend line break condition. So
there's added confluence, and then as you say, high probability wise, yes, you check the data to confirm that. But that then creates turns a low probability, as we mentioned earlier, into a higher probability.
Yeah, exactly.
And then is this like a cycle though? Because then once you get here, you return to ATT, at the bottom, and then to trendline break, and then to continuation.
So it's a simple way a trader can manage this is they can say, well, actually, I would rather trade one condition.
Okay.
So I'm going to trade one condition. I'm like, okay, well, if you're doing that on the euro, then you're not going to have a lot of trades. So if you're going to trade one condition, you're probably going to want a multiple.
Seems like a pretty interesting setup, right? I've never traded like Forex, but from what it seems, typically it's kind of ranging like this. Pretty like straightforward, simplistic way to go about it.
Want a bigger watch list. So what you're doing then is you're scanning all of the different markets in your watch list, and what you're saying is that one, and that one have the potential to be in a trend line break condition. The rest of them I'm not interested in. So when I say to traders, I've got 40 markets on their watch list, like how do you keep track of it? Well, I'm not trading all of them because I'm only looking for ones that fit a certain condition. Whereas another trader might have the approach with, well, I'm going to trade 2 or maybe 3 of the conditions, okay, well then you may only want 5 to 10 markets in your watch list because you're going to be busier as a trader because you're going to be picking up with the trend setups, against the trend setups, and trendline break setups. And obviously, there's the scenario there with if you trade against the trend and with the trend, then you could be in a scenario where you've taken against the trend trade, you're stopped out, but price decides it wants to go back up, breaks the trend line, and then you've got the trend line break very soon after.
Yes.
So I'll talk about the pros and cons in a little bit. So essentially, I'm using the support resistance, the trend lines, and the moving averages to determine whatever it is. Market X, is it in any of these conditions, or is it in no man's land? So is it essentially choppy through the middle, it's not going anywhere, or is it sitting, either side of a resistance level? It's not made its mind up at that point. So.
I love that. So clear. And I love the how to add in confluences such as this area here, where we turn a lower probability scenario to create a more higher probable scenario, and the mention of, if you want to focus on one specific style of entry and methodology, then how do you go about creating the opportunity problem that comes with that?
Yeah. If I was listening to this 15, 20 years ago, I'd be like, show me how I can trade in each condition.
Yes.
But as I've got older, and I'm not saying I'm taking a more cautious approach, but my trade frequency is less now than it was 10 years ago. I'm quite happy trading in one condition, or I might reach into another condition if some of those filters that I mentioned earlier, like divergence and sentiment, mean that I see a setup that again is higher probability.
I think the as experience continues and as your market, not only market experience but also data is added over time, it's a natural order of things to go for the higher probable scenarios, the ones that you see least resistance with yourself when it comes to psychology, but also performance-wise. I think that's a very natural order of things. But I can understand being early on, you want every opportunity and you want the strategies that presents every single opportunity as much as possible, right? Yeah.
And I think the other thing I think when we talk more about pros and cons is, as a swing trader, it can feel an age. 3 days between trades can feel an age, but actually when you add it up over the year, you could be up to 150, 200 trades.
Yep.
So in the moment, it feels like nothing's happening, but actually there's plenty of trades when you're consistent enough. Yeah. So that's
they're better quality, right? They're typically better quality. The thing that people don't realize. Typically higher probability, and the moves are a lot bigger. Like you might be scalping for like this little price range, but on a swing trade, you're like scalping, like you're not scalping, but like your trade, instead of being from like entering here and taking profit here, you're like entering here and taking profit like fucking Lord knows where, right? Just off screen from what you're currently looking at, basically. So gains are way juicier.
Discretionary analysis process part. So it's how do I choose what condition that market is in against a trend line break, and then essentially it's you already know which conditions you're going to trade. So if you're going to trade a trend line break condition, there are now a set of specific, what I call entry criteria, what a lot of people would call a strategy. I see it as entry criteria. So now we're going to talk about, well, what are the ABCs that mean if it does those 3 things, I take the trade.
I like that. Yeah.
Rather than just seeing ABC anywhere on a chart, it has to be in that condition. Okay. So the way to think about this, if there was a word to describe the discretionary analysis, I'm essentially filtering out the markets that don't fit that criteria. Yeah. And what I have, and the guys I work with will have, is they will have specific ABCs for each of the strategies in the criteria.
Discretionary and the translation then to mechanical using that discretion.
Because what this has allowed me to do and allows other traders to do is create more data, because they're not trading a different scenario every time they wake up, or they're not just trading at a support and resistance. Yeah. They're saying, okay, I can measure how good I am at finding the condition, and also then I've got a measurable set of criteria. Now that's going to reduce the number of options, but over time the trader can, like I've said, not only can they go the way of reducing the number of conditions like I've done over time, they can go the other way and say, now I've mastered the trend line break setup, I can move on to the with the trend setup, or
and increases. So you're creating you're reducing first to create high probable scenarios and trade opportunities, and then once you've done that for one, you then can increase those opportunities by then going through that same process again.
Yeah, exactly. So once we get down to the criteria, and I'll work through it, there are 2 elements to it. They're what I call initial technical triggers. So an initial technical trigger are a set of almost keys, a set of absolutes, like gates. It's like if they don't happen, the rest doesn't occur. So even though you might think this is going to happen, or Powell's going to say this, and I want to be in that market, if these initial technical triggers happen, you leave the market alone. So if I'm looking at a trend line break, as we go back to that, let's assume that we're happy with this level. Price has got to come in, and it's got to hit the level.
Yes.
So can't get close, can't be a little bit far away, it has to hit. Right. Now, somebody might say, yeah, but what if there's a divergence, or what if it's close to the level? What if it's only 3 points away? We'll come to that in a bit, because that's the more advanced. But again, what I say to traders is, be disciplined with the basic setup first, and then as you master that, then you've earned the right to add in a little bit of flexibility as you
It's
go.
that intuition, the
Yeah.
different elements. Yeah.
So it must hit the level. Then we've established a trend line based on the idea that we are working to the most recent lower, well, in this case, the most recent lower high that creates the lower low.
Yes.
And then very simply, price has to come up and break the trend line.
Okay.
So at that point, once that trend line's broken, market X comes out of the main watch list and goes into what I call your possible trade list.
Mm.
So it's one of your shortlisted markets.
Man, this guy's an acronym for literally everything. Holy shit.
Trend line break condition.
Yep.
It's done the two initial technical triggers, hitting the level and breaking the trend line.
Yes.
Now,
Oh
I know
my
there are traders out there that
gosh.
want to get in at that point,
Mhm.
and I'm sure if you went away and there are strategies that would work if you say, right, as soon as the trend line breaks,
Mhm.
get in.
Yep.
But if we think back to what I said before about coming down and that hitting of the 21 being high probability,
Yes.
what I wait for, probably need another color, is
Mhm.
I wait for price to break the last lower high in the move.
Yes.
So again, if we think back to our conditions, if I'm looking to trade against the trend down here, much more risky because I've only got the trend. But now I've got a bounce off the level, I've got a break of the trend line, and price has told me it wants to go higher.
Yeah.
So very simply, all I will do in that scenario is I will wait for price to come back down and test the moving average. So if it comes down, hits the moving average, that's my entry. So I'm in at that point there.
I love that. Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, the CFD Every Trade Instant Funding. You get on limit, and on every challenge type, you can get, once you've achieved 10% on your funded account, up to 15% of the profits during the challenge phase given back to you. In addition to that, you can also get a reward bonus equivalent to the same amount as your subscription fee on your first payout. And just in case that's not enough, there's no time limit on most challenges. News trading is allowed. There's no imposed limits on instruments or position sizes. They have scale-up plans that can 10x your account size, and something that they did first. If you don't receive your payout within 24 hours, you will receive an additional $1,000 compensation. Now, if that doesn't tell you that they're for traders, I don't know what will. Now, make sure you use the code CF to get the best offer available at Funded Next right now. The link is in the description below. Make sure you join Funded Next today. Now let's get back to the episode. Hey guys, before we get back into the episode, a massive update from Funded Next. US traders, if you trade CFDs, you are now welcome at
I still
Funded Next.
yapping?
They have applies for that.
Strategy again. I want to focus on the core because I could give everyone like loads of different
Yeah.
variables and everyone do it. So the core element is you simply trade back up to the high,
Mhm.
and that distance there, whatever it is, let's say it's 100 points.
Yeah.
Your stop goes 50 points below. So your
Okay.
stop is always half the distance between the entry point, which is the 21 moving average,
Mhm.
and
Your target.
the previous
and the
high.
Yeah.
So again, if that was 200 points, your stop would be
100.
100. You just move it that way.
You go for 1 to 2s.
Yeah.
Interesting.
Because if we think about it in this scenario, this area, once we come back up, so let's say the trade triggers, we're good and we reach our target.
Mhm.
If we go any higher than that, we're moving into
A different.
condition.
Yes.
We're moving into the with the trend condition. Now, somebody might be listening and saying, well, what could I hold it? Can I hold it for longer? And the answer is yes, but you want to know how that's going to impact
Mhm.
your results. Because since 2018, at 2-to-1, we're operating at a 58% win-loss ratio. Now, I've worked with traders that have upped it to 3, but that will impact their win-loss ratio. So the answer is yes, you could run the trade for longer. And there are some factors I'll talk about. But the idea here with entry 1 is wait for price to come back down to the moving average, enter at the moving average, get out the target, stop half the distance. The nice thing about that is from a swing trading point of view, it's easy to set up.
Yep.
You only need to check it 2 or 3 times a day, and it's very easy to program in, an entry bot to do that.
Yeah, to signify.
Yeah, not to do all of this,
Yes, of course,
just to do the entry for you. So that's the other one. Now, if price starts to come back down, but not make it all the way back down to the moving average and starts to consolidate,
Yes.
then you can look for a breakout entry. Now, the breakout entry probably fit here.
Yes.
I'm needing 2 highs, either as a neutral, as a minimum, and 2 lows,
Mhm.
or I'm needing 2 highs and 2 lows as an ascending.
Okay.
Right? So either neutral consolidation, ascending, and then you do the same process here. You go in
Stop loss below the low.
stop loss below the most recent low,
Yeah.
and then you're looking for another 2-to-1 scenario
Mhm.
there. So again, I would suggest to anyone listening that they go and focus on one of those 2 entries
Yes.
first, because otherwise you risk having 2 entries, 1 condition. I mean, that's still better than having lots of different conditions in lots of different,
Yeah.
lots of different entries in lots of different conditions. But yeah, so what we're allowing for there is the price action to do 2 different things. It might be the price wants to consolidate. We've had a very similar scenario
Mhm.
on Euro prior to the breakout a couple of days
Yeah.
ago. We didn't have it coming to a level, so it wasn't the setup,
Yeah.
but it's done that consolidation and then it's popped.
Love
So it's
that.
a similar process.
It's so artistic. Yeah, it's so great. Yeah, I love it, and it's so clear as well. And what I love most is, and I think a lot of traders don't do this, and they don't do it enough, is being able to split the conditions up and understanding that if you've taken a particular trade under a certain condition, when it's hit your target, because I think traders get guilty of it. I know I have. It was where you've gone into a trade for a certain reason and had a target set, But because that trade's moving very nicely, you kind of like, let me hold this longer.
Mm.
But then once you've gone beyond your original target, it becomes a different trade.
Yes.
And I think it's so easy to forget that. And I love how this is really highlighting that as well.
And the nice thing about this process is all of this is done before your tick box criteria, i.e. the new high, the pullback down to the moving average. So, and also the filters that we use when I mentioned divergence
Yes.
and I mentioned sentiment.
Yes.
These are all done before the ABC criteria. So if I'm going to choose to run that trade for longer, I'm making that decision prior to the setup, not once.
So where the filter comes in.
Yeah, so I'm going to talk about that in a second.
Okay, look.
Because what a lot of traders do is exactly what you said. They go, oh, I think this is going well. And then they stay in it, and then they stay in it, and then reverse out. And then they're sitting there going, I wish I'd just taken 2 to 1.
And then that what leads to the revenge trade, the next trade not being on plan. And
Oh, that's not true, right? That's not true.
And it
Like, there's definitely ways to use this setup to have trades run efficiently, and you can also just not round trip on the way back, right? Have some like tight, low moving average to trail it, or use like trailing stop or etc. Right? There's many ways to go about doing this.
rallies off, and then they go, I wish I'd stayed in it.
Yeah.
So part of what we're doing here is to eliminate that element of bias where you feel you've missed out because of what's happened. So the only way that I will run these trades for longer if there are certain things happening in the market, and that will still have a consequence on my overall profitability. Well, I might be more profitable, but my win loss will drop.
Will change. Yeah.
Yeah.
I love that.
I highly suspect if they were to run the data on this and do what I just said, it'd probably be more profitable, right? So you're taking the legs out of your trade as soon as it reaches the 2-to-1 target. When you just got like essentially a confirmed bounce and change your structure at the bottom of this high time frame range.
Wow. So I'm going to come to the filters in a second, but the one thing I did want to cover is, and again, this is where I see a lot of traders struggle, is time frames.
Yes.
So how do I approach this from a time frame point of view? So I've got my discretionary analysis process where I'm determining the market condition. So what I have, what a simple way of putting it is, I've got analysis timeframes. So timeframes where I'm going to do the analysis to determine which condition we're in. And then what I'm going to have is trigger timeframes. So the timeframes I'm actually going to take the trade on. So there's no flex in this, because otherwise you risk going down to a time frame you're not used to, suddenly seeing a trend and thinking I'm going to jump in on this, but there's necessarily no data to back that up.
Stays very mechanical in that sense.
So it's a top-down approach. So if I'm looking at a swing trade setup, monthly chart, I'm not going to spend too much time on there. It's only if I need to. Weekly and daily. That's where I'm going to establish my key levels, support resistance, or my key levels, or my what I call the proceed with caution level, where I've only got one high.
Yes.
My trend line is primarily going to be on the daily, and then the trigger time frame for that is the daily.
Okay.
Now I'm going to show you a way that you can go slightly lower, but that principle there. So if you were going to look at something like this and say, well, I'd like to see where this works on a 15-minute time frame. Well, adopt a similar approach. So if you're looking as an intraday trader, then you want to be looking at your daily, your 60, and then your trigger time frame for where your trend line and your break of your trend line would be probably something like a 15-minute.
Yeah.
So again,
60 would be like the hourly, basically.
yes. So in that scenario, I can tell you straight away that the data that backs this up works. I can't tell you there because there's nobody I know that's trading that. So, but there's no reason why that principle wouldn't work.
Yeah, price is very fractal.
Yeah, but the idea is if you can keep your time frames, say, right, these are time frames I do the analysis on, these are time frames I take the trades on, it makes it much easier to measure.
Yeah, it's that rule based that creates a big difference in certain elements, because as we say, there is room for discretion, but there's also room and necessity for rules and tick boxes. Yeah. And even though you may not have the data for that, if the rules are followed, then the results can be there.
Yeah. And different traders, it's a little bit of a scaled line. Some traders need to be, some traders, if that's mechanical and that's pure discretion where anything goes, fibbed on one day and something else on the other day. Some traders, if there's a sweet spot, some traders are a bit more towards the discretion side, some are a bit more towards the mechanical.
Yeah.
There's nothing wrong in that as long as you own the process. You don't have to be slap banging them. I'm not sitting here saying this is the most optimum, but after working with so many traders over the years, you realize that I usually see the trader when they've been over here, too much discretion, they go all the way over there,
and they struggle
because they go, I just need a strategy, and then they want something where it's, I'm going to buy above this candle, sell below this candle, and stop goes in the middle.
Yeah.
And what you don't realize is that might work, but there's a consequence to that, and you've got to take every single trade.
Yeah.
Whereas with this, you've got this filtering process. And the other issue I see as well is that traders let's think of a different way to explain it. I like to get my discretion out the way at the start. So I know that market is in that condition, and then we'll talk about the filters in a second. If the filters are there, which add to the price potentially moving further, I make the decision to do that there, and then the rest is just a wait, rather than this, I'll wait and see if it sets up, or maybe I'll run it
further. It's more like freestyle discretion at that point versus planned discretion.
Yeah, and what I found is most traders end up using discretion, so formalize it, Do it up front, so you can.
It's kind of in a way making a mechanical process for your discretion.
Yes, that's exactly great way of putting it. So the filters. So if we go back to the scenario of price coming into the level, breaking the trend line, and then the potential move back down to the moving average. If, as price comes into the level, or prior to price coming into the level, I can see a clear set of lows like this, I will look for what's called a divergence. So to explain what a divergence is just where I'm seeing the lows moving in one direction. So they're coming down. And then I've got another tool, but the other tool that I'm using, I'm seeing the lows coming up.
Yeah.
So the two lines, although some people say, hang on a minute, are they converging because they're coming together? No, that's just a form of divergence. They're moving in the opposite way.
Yes.
So this is really the only indicator process that I use. Other than the moving average to get in on the trade, this is the only other thing I will use. So what I will look at is what's called an MACD. So an MACD is just, the term is moving average convergence divergence. It's what I call an underwater indicator. So it's below the price action area. It's sort of down there. And what you've got is you've got two lines. You've got a moving average line, a standard deviation line. All of that doesn't matter. It's how you use it that matters. So if I see the move at the MACD, the two lines on there, if I can see that they are moving in an upward direction as price is coming into that level, then that will be a potential reason for me to consider holding the trade either to a higher time frame moving average, another level of support resistance.
Something that's predefined.
Predefined as well. The only other one that I bring in that I'm going to mention is sentiment. Now, what I'll look at is retail sentiment. So the principle.
I don't know if that's particularly it's a bit of an interesting way to use a divergence, right? At this point, the divergence has already played out. It's already broken the high. Like, the idea is that like you're using the divergence to anticipate this being the low and getting in at the low. So I'm not sure if he's like referencing the first setup. What did he call it? Oh, against the trend. Like, yeah, if he's taking one of those, that setup type of trade, okay, fair. But if you're deciding to hold the trade after the divergence is already played out, seems a bit odd, right? Seems a bit odd.
Is most retail traders are on the wrong side of the market most of the time. So if you're looking at a market and you want that market to travel up, and at that point, retail sentiment or a certain percentage of retail sentiment is selling short, then the idea is you're better off going long because you're going against retail and retail.
And that's in line with all the rest of your confluences already.
Exactly. Now, what you tend to find, if we exaggerate this move out, is retail sentiment becomes more apparent once we go into a with the trend condition rather than in our trend line break condition. So you're more likely to see a disparity. If you're long, at this point here, retail sentiment tends to be starting to go, a greater percentage is going short. So for example, here, you might be long, but 70%, 75% of retail sentiment is short.
Yes.
And that, usually if the trend is strong, that will increase. So the further the trend goes, the higher the retail sentiment. So a lot of the time in this scenario, you don't see retail sentiment heavily short. In fact, a lot of the time it's neutral. But on various positions, it might be 1 in 20, 1 in 30. At that point there, if I see 60 to 70% of retail short, that is an early sign for me to potentially hold that for longer. It's no guarantee, but that's something that I will look at. And again, these are the little nuances. So if I'm starting to look and see, I've got a nice divergence on here, I've got retail sentiment short very early in the game. I don't want to see 80 or 90% because that's too far. But if it's moving in the right direction, the more retail are getting short here, when normally that would happen up here, that's a nice sign for me to potentially run that trade longer. Now, I'll still potentially pay the consequence from a win-loss point of view, but that's how I'll get bigger trades. And obviously, you've just got to flip it for the short side.
I love that, yeah. Because the short side would just be the opposite way around. So this would be facing downwards, and this would be.
I can draw it if you want, because if the guys want to see it, because it's the visual element. Because the idea of the trend running up here, we're coming to the resistance. So at that point there, I'm looking at the MACD above the midline on the indicator, and I'm just lining it up. If I see that too low, the highs getting lower, and these highs getting higher, then that's what I'm looking at there. And if I'm looking at retail sentiment, and I've got retail sentiment sitting at 60, possibly 60, 75% short at that point. Sorry, not short, long. And I'm wanting to go short. That's those two filters. They're not a filter that makes me think, right, I've got more chance of the trade. I've got more. It doesn't add certainty to that move. It adds certainty that if the trade works,
that could continue.
Yeah. So that's how I'll do it. In terms of anything else of the strategy itself, I would say the pros of it. Again, some of your listeners might be listening to this thinking, guys, there's a lot there. But if you break it down,
very clear. I think it's very, very clear.
3 steps.
The illustration was amazing.
Yeah. So 3 steps is define the market condition. For this one, it's trend line break. Then you've got your ABCs of the setup. Which include the initial technical triggers, which is the must. It must hit the level. It must break the trend line, and then you look for the high. And then you've got on top of that your filters. I would suggest that you practice this perfect this before you start
Okay.
going in trying to go for your 9 to 1s, your 10 to 1s, your 5 to 1s. Keep it simple and work to the 2 to 1s to start with, because that's where the higher probability win loss. And I think whenever you're a new trader,
That
or
builds the confidence.
yeah, or even if you're not a new trader but you're doing something new,
Yeah.
you want to bed in with that strategy first. There's plenty of time to start filtering and optimizing it from that.
I think that's what it is. I think a lot of people are trying to optimize to perfection straight away versus build a foundation where the confidence comes from. You've really learned all the processes at that point. You've really learned about data. You've really learned to the more about nuance, and then start to optimize.
Yeah, love that.
Which this highlights really, really well. So what are we talking in terms of pros and cons to this approach?
Good. I would say pros of this. So we're looking at, I think the key thing is that you, from a swing trading point of view, it's easy to fit in with what you're doing. So if you're somebody out there listening who's not got a lot of time,
Yeah.
the nice thing about this is to define the markets that are in the trend line break condition.
Yes.
That's probably 2 scans of your whole watch list a week, maybe 3. So 2 to 3 scans a week into seeing what markets are in that. And then your possible trade list, which is the one that is close to getting to the level, it's starting to do the initial technical triggers. That's 20 minutes in the morning, possibly 10 minutes at lunchtime, 20 minutes in the evening.
Yes.
So you've only got to check that list because you're essentially just ticking off the ABCs. So you can fit it in nicely if you're a swing trader. It'll fit around what you're doing. So that's, I think, one of the key ones. I would say win-loss. Now, at 58%, somebody listening to that might not think that's a good win-loss, but when you've been around as long as I have,
Yes.
58 at 2 to 1
Sure.
is good.
I would say as well that yes, it's discretionary, but it has a balance because it gives you a balance of discretion and mechanical, which a lot of strategies that people try and hunt for don't give you. One or the other, like we talked about. I think that's definitely a pro. Which also in the discretion element, you could say is a con in a sense because people always let it go. But that's down, I guess, less so to the strategy, more so to the person. But I would say the balance of having that discretion to mechanical is very clear. And it is very clear in terms of what you're doing, the processes. And I think the dynamicness of being able to go take a strategy with still a mechanical approach in a sense, in terms of the filters of how to actually extend targets, is a very great benefit too.
Another one is for you listeners out there that may be already using supply and demand, or they've got a different way of analyzing, because it's broken down into support, resistance, trend lines.
Yes.
Obviously, I'm looking at that simple frequency and proximity method, and I will use zones. So it's not simply only
One line,
on one line. I'll use zones, but they may have their own way of doing it. Well, great. I'm not sitting here saying you've got to do it my way, but you've got to go and test it. So the idea is you can use your own analysis process, but test it first to know whether or not it works.
Of course.
I think that's a key one. I think I wanted to highlight a couple of the cons because it's easy to focus on these.
Positive,
I think one of the key ones is, I've mentioned this earlier, it's swing trading. So I've seen the data, I've seen the distribution of the trades. You can go a couple of weeks, maybe even 3 weeks without a setup. But then what happens is you'll get
loads of setups in one go.
So you might go, you'll get a quiet period, and then you'll get 4 setups all in one go.
Yes.
Now, I wouldn't say this is necessarily a con, but it's something to be aware of, is because of the nature of having Forex cross pairs, majors, having various things in your list, is you might come in and go, wow, Euro yen, CAD yen, and then you've got, and then maybe not CAD yen, but Aussie yen, you've kind of got, you've got a load of cross pairs all doing a similar.
Quite correlated.
Yeah, so they're all trending up, they're all getting nearer level. Now, initially, I thought, do I want to potentially be in 3? But what I found is a lot of the time, because the entry is very specific, only one of the 3 actually, or 2 of the 3 actually sets up. Sometimes you'll get a scenario.
Every marker.
Yeah. No, you'll find all 3 in the trendline break condition.
Yes.
You won't necessarily get all 3 set up. So it's just something that I've had traders get worried. They're like, oh God, I've got 3. Well, if they all lose, or something happens to the yen, I'm going to probably lose on all 3.
Exactly,
but often you don't actually get all 3 setting up.
And that's where the benefits of the mechanical sort of ticking the entry model.
Yeah. I think a big technical one that I've seen is that traders forget about the resistance level and just look for trendline breaks. And then the problem is, before they know it, they're actually not trading trendline breaks. They're just trading a choppy area, and they've forgotten about letting price get further away.
It's like not following specifically the rules. Yeah.
Okay, so I'd say technically that's probably one of the big ones that I see.
I love that. Well, let's pull
I mean, that's a con of every strategy, right? Not following the strategy.
So clear. Drop a comment.
Probably a con for everything.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella, if you're a trader, tip. We're trading with these incredible verified traders and on TradeZella.
Gosh.
Okay, so we've got the laptop out. We're ready to go over some charts after that incredible today. Now let's get back to the episode. Okay, so we've got the laptop out. We're ready to go over now some charts. So after that incredible breakdown of the strategy so far, we're going to now see live examples on the charts. Some that were actually taken with trades and receipts also, which is always amazing. So yeah, let's go straight into it, Ali.
Okay, yeah, I thought what I'd do is I would break down both of the entries and then some of the, I think, a couple of subtleties. So I've gone for some examples from a couple of years ago. So you can see here, they're all trades that I've taken. I've taken it with my group as well. So I'm going to break these down, each one specifically, because there's a couple of key elements to be aware of. So we're going to start with the trade on dollar yen. So if we think back to, so there's a couple of things I want to talk about specifically with this particular trade, because one of the questions I get is, does price, obviously price has to hit the level. So remember, we'll establish our level, we'll establish it whether it's a key level or proceed with caution, and price has to hit that level. But one of the things that's nice about trading a trendline break setup is you can allow for price to push above the level. So obviously what we don't want to do is be just trading a break of any trend line anywhere. So the rule that we have in this scenario is price can go higher, but if it was to come back down and do a second higher high, then the trade is void, even if it then comes back down and breaks the trend line. So what we allow is for a bit of flex, because we're not trading against the trend up at this point here. We're waiting for price to come down and break the trend. So we get that here. But the reason I pulled this example in is because sometimes what will happen is you'll get a move, and you can see here we get the consolidation move here, but what we haven't got is price lower than the last higher low in the move. So we've got to wait. And this is where sometimes traders can get nervous, because they're waiting and waiting, price is falling, but we're waiting.
Because he missed the setup, right? This guy missed the failed auction. I missed it. Hey, everyone's smashing on this bitch. Motherfucker's getting down here.
Move right there. But this is an example of the first pullback into the 21. So the reason why I pulled this one in is because this isn't uncommon. You know, especially when you're looking at a short move, because often the market will fall quicker than it will rise. So you have to wait a little bit longer.
This guy.
What I will do in a situation like that, especially as prices move down, is I am going to keep an eye on what is going on to the left. So even though, again, even though I'm going to look to the left before the setup occurs for the discretion, I'm still going to do the same thing. So if I was looking at a big area of support that would be impeding the potential of that trade, then I may choose before the trade sets up not to take it. But as I can see, really, we're okay. Yes, we've got a little bit of it, but it's not until this area here where we've got a little bit of support. And a couple of other things. You'll notice here that price creates the low at this point, and now we're looking for price to come back up and test the moving average. What you'll notice is price comes back up, and it actually does a higher low prior to coming in. And again, that makes traders nervous, but data over drama. We've done the testing, and it's fine for price to do this on its way into the 21. It still works and still has the high probability.
Maybe it adds on more, essentially, buyers that sat there at the lows for yourselves. And one thing I love about this as well is just showing how, again, as we talked about, the nuance of how simple it can look on the whiteboard, but then the reality can look different. Though the rules are all there, so as long as the rules changed, everything remained the same. The tick boxes, the scenario, the positioning of where we need price to be. But you notice how, as you said, like price selling off in this manner before then ticking the box. A lot of people would assume, oh, that's it's not the right trade, but still the rules have then been met. Trade executed, trade played out.
Now, if we were looking at this same,
is this channel legit? Thought you were balling with your strategy. Not sure. Like the channel I'm watching. Yeah. I'm all. He's bit my lip. I'm not watching it to change my strategy. I'm just curious what other people do. Maybe there's something worth stealing. In this case, not really. No. Seems like a very beginner-friendly strategy that anyone can follow, but also seems to be incredibly inefficient. But at the same time, this guy like outlined 3 possible setups, and he's only discussing one of them. So maybe he has a way to get in up here. Because me personally, if I was taking this trade, I would have been up in from way higher, juicing this whole move.
Scenario, and the support level was here, and it had basically done the whole range, then I'm going to say no. But if we actually start to look, we can see if we zoom in a little bit, you can see that relative to the previous move, we're not sitting at a key. The next level of support is there, so there's enough clean air for the minimum of 2 to 1. I actually ran this trade a little bit longer because I saw there was a little bit of extra room there, so I ran it a little bit longer. But the core 2 to 1, if there's not the clean air, then I won't take the trade. So that's the first one. I wanted to have a look at pound New Zealand.
I love that pair. Well, I used to. That was one of the first pairs I became profitable on. No one really trades it. Well, no one I've seen, but thankfully today we're going to see that.
Yeah, you're going to see a trade here. So again, a couple of nuances on this one. You'll notice, I'm going to scroll back. You'll have to forgive me. I spend most of my time on a desktop.
That's okay.
Not on a laptop. A bit of a dinosaur. So here what we've got is the prior resistance zone. So again, I'm not looking for it to be, it doesn't have to be exactly hitting either the top, the bottom of the zone or the top of the zone. It just has to come in and hit any of that area, which you can see there. So you'll notice again with the trend line, I've cut through a little bit because I want to prioritize the most recent higher low that creates the higher high that you can see there. Now, with this one, you'll notice that if I just squeeze in a little bit here, you'll notice that the range on this particular market isn't as deep as the last one on dollar yen. The range is a little bit smaller.
Yeah.
So we are extended relative to where we've been, but it's not. We're a lot closer to the other side of the range. Now you see we'll get the break, and what you'll notice here is price comes down. There's no divergence on the indicator. So for this one, this was very much. I'm not going to try and run this trade because I haven't got any of the additional filters, and it is a bit of a here's one I've picked earlier. But I wanted to pick this one for the listeners because you can see there was none of the additional filters. So as a result of that, for me, it was just the straight 2-to-1, and it clipped it. And the trend actually carried on. So that's the other advantage of this, because you're only going for the 2-to-1. If the new trend doesn't want to continue, and we push on, you still had your trade, and you've still been able to trade in that
and
pocket.
you can see
to
how
call it.
easily, the trade hitting the markers, breaking the trend line, came into that resistance. We're at quite a significant high at this point. Bearing in mind it's the daily time frame as well. And previously, if you look to the left, their price has sold off quite aggressively back to those lows before twice. Just in what's in the picture. I'm sure it's probably done it before. How easy it would be to assume to sell and hold because it didn't hit the filter. It's really showcasing why those rules are in place.
Brilliant. Exactly right. And again, a lot of traders will, I always say that your levels are not your decision-making point to do something, not necessarily your decision-making point to place the trade, because our trade comes after the trendline break. But again, traders fall in the trap of going, well, last time it was here, it went there. Last time it was here, it went there. Well, this is an example of where that sideways move didn't want to continue, but I've still been able to capture that trade in there. So exactly right. And then the last one I'll show you, which was on oil, is actually the other entry. This is the consolidation entry on this one.
Oil, interesting. I thought you traded only
I'm going
4x.
to have to go down. So this is one of the nuances that I didn't mention earlier, which is 4-hour entries. So again, I talked a little bit about the testing on a 60-minute time frame and trading on a 15-minute. One of the things that we did, this strategy came into play for me in about 2016-17, but a little bit later around 2020. What we looked at is, well, what if we used the same trend line? So we used exactly the same trend line as the daily chart, but looked at the entry slightly earlier. So essentially a fractal element to it. So looked at the entry when price was coming in to the 21, but a little lower down. So you'll see this as an example here. So these kind of setups I love, because if we actually look at the price action here, what we've got is we've got a resistance level here on the 4-hour, and we've got a trend line here. Now that resistance level will show up on the daily. I've just squeezed the data up, but you'll notice that the range is between here and here. I could pop a line in right there, and then we expand to the downside, and then come back up to the resistance level. So that's that overall price action I really like, when we break to one side but then come back up to the other resistance, because what that means is that market is stretched. So we've got our upward move, we've come into our resistance, so we're still sticking to those key technical triggers. But if you notice here, I'll have to just now I've got the MACD on the chart. What you'll notice, I'll just repeat what I said.
You know what's funny about these fucking charts is that every single one of the things he's talking about, there's like a failed auction, right? And the breakdown of the level is just a massive red dildo, right? Probably because people are smashing in that trade. Same thing as the other chart. And this guy's a laggard, is what this is, right?
We've got price coming into the level.
A laggard.
Between the last two highs, so
Too
the high
slow.
prior to the resistance, the high there, we've got a divergence. And what I call a proper divergence, a big step down. So you can actually see that divergence there. And then what you'll notice is I'll zoom in a little bit so you can see it. So initially we get price consolidating right here. But what we've got is that consolidation is happening above the last high. So as tempting as it is, I've got to ignore that, because I need the consolidation or the pullback to the moving average to occur lower down. Now again, I'll zoom in a little bit here so you can see it a bit more.
Are you saying limits in these scenarios or manual entries?
This one would be a simple self-stop. So what you can see is we've got the consolidation. Now this consolidation there, this one probably looks cleaner as a consolidation, but it's not below the level, so we can't do it. This consolidation here, although it's only a few candles
tighter.
Yeah, it's tighter. Happy with that. So that's the entry point there. But because of the divergence, and what I started to see sentiment doing what I was saying earlier. So this was an example of where I had the filters, and then this trade I ran down. And I can actually remember it because the spike came at about 11 o'clock. It came about 11 o'clock at night. So something happened on oil at that point. But yeah, this was essentially my exit around this low here. So I saw the spike, came down, and again, I was watching this. I was an element of trailing stop to it as well, because I thought I'm not gonna let all of that go.
In terms of your management, like is your management using sort of more the EMA?
Yeah, so with a trailing stop, I'll use structure. So in this scenario, we have the trade. The trade is starting to build up. I'd already planned to run it down to this low because I've got the two filters. So I was like, now I'm looking at it. It's not because the price action has gone sideways previously. It's because the filters are there. And then
okay, so he does use trailing stops and whatnot. Okay, interesting. So maybe he's just kind of giving a very layman explanation with the idea that this video is aimed at like a beginner trader, I suppose.
I'll use an element of structure. So I say structure, basically, if price consolidates, breaks that consolidation, then I'll edge my stop down to usually the most recent low. But I'll make, again, it's a little bit discretionary. Same thing occurs here. We go sideways, we pop up, and then when we break lower, I'm bringing my stop down to this level. And then we consolidate, we break lower, bringing my stop down to this level. I wasn't expecting that move that we got there. It popped back up, and then I actually took a manual exit out of the trade because because of where we were.
Amazing. And in terms of the 2-to-1 trades, would you just leave the stop loss in place and the take profit? Because they're quite shorter trades. So
yes.
Maybe micromanaging those is a
no, I wouldn't. No. Well, again, I think you're probably right on that, and there's no data to back it up. So for me, on a 2-to-1, those trades, if I've decided it's 2-to-1, it's in out, and it does what it does. But with these trades, if I've got a plan to run it down lower, then I will.
So most of the trades, in terms of execution, are they like stops, like sell and buy stop orders? Or
yes, yeah. So the one thing that I will do if it's a 4-hour is personally what I've got is a little EA that I plug into MT4 because obviously on a 4-hour, if you're trading the pullback to the moving average is going to be moving around a lot more. So having an EA that just kicks me in, and the EA is programmed to know where the previous low was, so it automates the stop. On the daily chart, a lot of the time I'm not bothering with that because it's you only got to check it in the morning, got to check it in the evening. So.
Ali, absolutely love that. Everyone at home, drop a comment of your biggest takeaway, any questions that you would have off the back of this, but make sure you watch this episode again because there's so much to take away. Make sure you make notes as well. Now, links for Ali will be in the description below, so check
We'll give him a little thumbs up.
So much more coming. Other episodes are on screen, and until next time, everyone.
Interesting. Probably one of the better videos to give someone that's new to trading, right? Especially with the fact that the way that he structured the entries of that system is like the way he drew on the piece of paper, right? Where it's like, what did I just do? Oh, there we go. Like it's essentially 3 trade setups, right? Like you're taking this, you're taking the breakdown, or you're taking the continuation of the breakdown if you miss this. Or you could take all 3 technically, right? If you really wanted to. And just kind of add to it as it goes. Like you could take the initial entry here, then add on the breakdown, and then add on like the confirmation, the continuation. You're like building a position that starts to go more in your favor. Interesting. Interesting. Should we make our own video? Our own Chart Fanatics inspired video? Just see you're yapping for like an hour straight about our strategy. In 1 hour ain't gonna cut it, tell you that much. Oh, what? Not no game over here. Oh damn, we basically made all the way up. Boom, 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 boom. Like 2 little baby gaps, right? You still have this little baby gap left, and now this little thing. Boom, 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 boom. Time is it? 10 o'clock. 30-minute candle closes, coming in hot. Okay. I'll wait for these candles to close and then move on. Maybe we'll see what this announcement's about. Thing is, I don't want to sit here waiting for like 30 minutes for them to just say like one sentence like I don't even care about. Ends up being like a big nothing burger. Boom, 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 boom. Is there anything that we need to research from that video? Not really, right? No. What about the one from before? Oh yeah, that guy's community, right? The Dumb Money TV community. Dumb Money TV. The free Discord. Okay. We are done all of our nerding out for now. I think that was it, right? Yeah. Let's see if we can find this announcement somewhere. Actually, we'll just wait, right? Screw it. Hmm. What else can we do?
618, that golden glow. With kids on, I won't ask twice. Top floor chalk, got a glass pipe. Cookies in the wood tray past night. TP hit, got the dashboard glow. Price hit fib like it's stuck on code. She asked why I'm calm, I just know. They trade loud, I trade low. Wrist got snow, but the feel still hit. Watch don't tick, it just exists. Trade so smooth, it don't resist. Zone got touched, now bag I live. No rush moves, I let them drown. Full them up, I slow it down. You hype on green, I vibe with math. You chase the trend, I fade that path. I don't get loud, I just get rich. I don't need calls, I got that script. I don't need edge, I am that edge. Just say yes.
Either we read a book or we watch one of these videos. One of the two options. Dun, 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 dun. And I don't know if you guys can keep up with the reading, right? I'm not prepared for that reading group powwow.
Marcos, laid back on my desk like a throne. Charred up, gaslit. Size 2.
Grow and let your open P.
They ain't built for this. Yeah. They keep talking about risk, but I am the range. Price hit my line, now he can't behave. I ain't even blink, caught the move like fate. They click long late, I reverse that wave. Smoking on pressure, chart glowing slow. Got a red box set where they think and go. I just draw, roll, chill, let it show. Hit they stops, that wick dip low. Ferrari red dashboard match the fib. She see the math, now she tryna live, sipping wine. Taking profits off rips, they need full setups. I just need a glimpse, yeah. Big size, bang, red wig, bang, bang. Chart talk slick, I slang, your little
Interesting.
ain't stressing no screen, I smoke. Top shelf haze, pure dope. They chase highs, I just float. Math move mean they get ghosts. No cap, I tap in the teeth.
Interesting.
0.5 slap like a slap to the dome. Imaginary lines still bounce to the bone. They said fake till they margin gone. Chilling in a robe, chart tucked in chrome. Jet fly, private trades hit from Rome. Wick kiss close, you know that tone when it reject hard and they bags get blown. Whiz type vibe, high math, no luck. Drawn from the top like a rough coat brush. Short, I'm clean while they foam mo clutch. Then I hit beach seats, feet up plush. Big size, bang, math, red wig, bang. Got 'em. Chart talk slick, I slang. Plotted, your little bad guy, bang. Ain't stressing no screen, I smoke. Roll up, top shelf haze, pure dope. Cookies, they chase highs, I just float. Drifting.
P&L grow because you can get the potential very large return. The con is if your timing is off or the rally doesn't continue, you are going to give back a lot of open P&L. When to cool off, sell as a strength or smaller initial size and trades, the rally has been going on for several months. So pros, you can reduce potential drawdown if the rally fizzles. Con, of course, if the market continues, you miss out on potential gains. So, and the ways to reduce heat or open P&L, you cut positions, raise trailing stop losses, and you stop initiating new trades. When the trades work in my favor, I increase the risk, 0.75 up to 2.5% risk per trade. That's total equity risk to account. Then the larger size is when all the stars align. That is not a frequent size. That's on a plus setup when I have traction in my portfolio. And you have to trust that sooner or later you will be trading well in a good market. And then all you need to do is connect with a few trades. You're up for the month, and then you can really ramp up the aggression and get really aggressive. And you don't want to start ramping the aggression when you're already drawing down. You only want to ramp when you're winning. So much of the game is surviving till you get a time, an easy money environment where there's 50 stocks that are up 100, 200% in a year, and all you have to do is catch a few of them with decent size, and you can have a fantastic return. I personally have never come back from a large drawdown in a month, but I have made the drawdown much worse, and I have had multiple losing months in a row. In hindsight, going back and looking at my results, I realized that I'd be much better off just cutting the losing months short, slashing risk and limiting risk going forward.
All right, welcome back, everybody. It's my pleasure to introduce the next presenter of the Trailline Conference, someone who I'm really looking forward to hearing from, Christian Flanders. Chris is a swing trader and top performer in last year's US Vesting Championship with a return of over 400%. He's competing again this year and doing very well in the Money Manager division. And today he'll be focusing on one of really the most important parts of trading and something that I think takes a little bit to grasp, progressive exposure. So I think this will help out a lot of traders out there. Chris, thank you so much, first of all, for taking the time. And yeah, thanks so much for being a part of the conference. I appreciate it.
Thanks, Richard. It's an honor to be presenting. I've watched this every year since its inception, so it's pretty surreal to be a part of it. It's wonderful. Thank you.
Well, it's of course it's great to have you. And yeah, let's dive right in. And first things first, I think yeah, this will be a great topic, and excited to dive in on progressive exposure.
Okay, yeah, great. Let's do it. So yeah, progressive exposure, the key to consistency and longevity in trading. So the big thing with trading is, you know, your goals. What are you trying to achieve, and why are you trying to achieve them? And this is very important because, you know, there's a ton of adversity that you're going to have to overcome as a trader. So it is very important to have a very powerful why to keep you motivated when the going gets tough. For me personally, I had 3 years in a row of drawdown, and you know what kept me going was the desire to provide for my family, and you know how much trust my wife put in me to quit her job to give me a chance to make this happen. So you know that very powerful why, and that kept me through the tough times. What return are you aiming for? What drawdown can you tolerate? And what are you willing to sacrifice to make it? These are all very important questions, which you know are key as we move forward through the presentation. Okay. Albert Einstein didn't actually say this, but I thought you know it's still a very powerful quote and something that you know you need a big brain to think about. But compound interest is one of the most powerful things in finance.
Huge brain.
And if you understand it, you can harness its power. So here we go. What's the rush? So a lot of beginner traders, and I was guilty of this too, are in a very large rush to make their fortune. You see the potential, you see the kind of numbers that you know amazing traders can put up, and you think, I want it right now. Well, if you look at the results of great returns, what happens over time if you can maintain a high compound annual growth rate, or a CAGR? Morgan Housel, earlier he had a great presentation about the dangers of trying to make too much money too fast with leverage. And I think this goes to show how much money is possible with solid returns and using the power of time and compound interest. Warren Buffett has a great quote on this, why he's so successful and why more people don't emulate him. And he said that no one wants to get rich slow. Everyone wants to get rich fast. So you can see the returns, you know, 20% return, 25% return. After a decade, after 20 years, after 30 years, the returns are I mean, they're mind-boggling. It's hard to even comprehend how big those numbers can get. And then you see, you know, some
hurry up.
Mark Minervini compounded at, you know, 150% for 5 years. Kawalagi has compounded for, I believe, 100% over 10 years. You can imagine how big those numbers get. Okay, and this is a slide just showing what a big losing year can do to your total return and how it affects your CAGR. So in the first example, you know, a trader, 250% years back to back, you know, fantastic numbers, you know, mind-blowing numbers, right? Year 3, minus 50%, and you see that the total return drops to 12.5%, and the CAGR drops to 4%. So this just shows how, I mean, ideally you never have a losing year, but you know, I've had losing years, you know, they happen. The goal is to keep them as small as possible, to not reduce your CAGR. So boom and bust, the killer of compounding. Charles Harris had a fantastic presentation on his YouTube channel. If you're not familiar with him, I highly recommend you watch it. But the bust is what kills compounding. Having the big down years, the big down months, really remove the power of compounding. So I have here, this is actually from a trader from last year in the USIC Enhanced Division, who showed his results. A fantastic year-to-date return, but what a ride to get there. Not a ride that I would enjoy. I don't think he enjoyed it either, but he got to the other side. But you know, you run a lot of risk with those kinds of monthly drawdowns. So how can we get off that roller coaster? Having rules, the discipline to follow them, progressive exposure, and then what I call a heat check. And so progressive exposure is I didn't define it at the start, but it's basically trading with larger size when you're winning and reducing size when you're not. That's really it in its simplest form. So here's a great Livermore quote: "A loss never bothers me after I take it. I forget it overnight, but being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul." So he's one of the greatest traders ever, and maybe the biggest boom and buster ever, going to $100 million fortune to bankrupt to. I'm sure he ran it up, I think, 3 or 4 times. So he was.
Yeah, this guy's quite the character, right? Jesse Livermore is quite the character. I just fucking ran it up and nuked his account and just said, "Fuck it, right? I'm gonna run it back. I'm gonna run it back." And then they nuked it again. And he said, "Fuck him, I'm gonna run it back."
Adjusted for inflation is over $1 billion as an individual trader. So the struggle with accepting losses is a recurring human phenomenon. We are all guilty of this, or it's ingrained into ourselves. Loss aversion, we feel a lot more pain from losses than pleasure from gains. I'm definitely guilty of that. Maybe you are too, Richard. The losses hurt a lot more than the gains. And then the sunk cost fallacy, which is you're reluctant to abandon a strategy or course of action because you've already invested so much in it, even when it's clear that the abandon would be more beneficial. So I have a story about this, but just an analogy with poker, that if you play poker live for long enough, you get a good idea of the kind of opponents you play against.
This guy used to be a professional poker player, apparently. I don't know how good he was, but...
Called the rock or the nit. And he only bets when he has it, especially on the river. If he makes a large bet, he has it. He has very likely the best, he has the nuts, he has the best possible hand. You know he has it. He knows he has it. The table knows he has it. The guy who is about to call him knows he has it. But he just can't let it go, because what if he doesn't have it this time? And of course he does have it, and he loses his money. So the sunk cost fallacy of already putting so much into the pot and then being unable to fold. So a sign of a professional in poker, a strong professional, is the ability to fold extremely strong hands with extremely high absolute value when they estimate the odds of it being good are not high enough to justify the call. So if you have the second nuts and a player that only bets with the nuts bets into you, strong players can make that fold, but amateurs would not be able to relinquish their hand in that example.
And just to jump in, Chris, do you want to mention a little bit about your professional poker playing background? Because some people watching this might not be familiar of like how you made that transition from poker to trading. Just very briefly, yeah.
Sure, yeah. So I played. Well, let me scroll back really quick. But I played. I should have started with this. But I played online poker for about a decade professionally before I transitioned over to trading. And I played primarily online, 99% online, but a little bit live. And online you're staring at a computer screen. It is much more mathematical, I guess you would say. But the few times I did play live, you see crazy stuff. I mean, you see guys, lose a hand, turn, they get visibly red, and they just start playing every hand blind. Blind is you don't look at their cards. They would just start playing every hand. I mean, you see wild behavior. And you see it in financial markets as well when market
losing composure.
When the fear gets really high, you can see it in the price action, the way prices move. I played poker for almost 10 years professionally before transitioning over to trading. So
yep. Also, I think worth mentioning, because I've got some questions about the analogies between progressive exposure in the markets and how that comes from maybe some poker player mindset too. But yeah, I'll let you keep going.
Okay, sure. So learning to take losses. So learn to take losses. The most important thing in making money is not letting your losses get out of hand. So I got to speak with a veteran trader who's been in the market since the 1980s. I mean, he still draws charts by hand, and even he still struggles with taking losses. He was telling me how his biggest regrets or his biggest mistakes are not taking the losses when he knows he should. He's more of a research and fundamental guy, right? So if he believes in the story, if he has conviction, he's going to try to let it play out, and that's resulted in some gut-wrenching losses and drawdowns. Drawdowns. So his thing to me was, discipline. Take the losses while they're still small and get out, because he's had to learn the hard way, and I have as well. Drawdowns cannot be controlled without taking losses before they become large. Everyone has losing trades. How you handle them is the difference between average good and great returns.
People really struggle with this. Like, I don't. Is this some common issue or something? I can't imagine how that's possible, right? Like, don't most people have some kind of invalidation when they go into the trade? Like, I'm not sure how these spirals occur, but seemingly they do, I guess.
Just posted this about 5 minutes ago, but I thought I included about the reality of controlling risk, and that if you don't feel like an idiot, you're not managing risk, because you are going to get stocked out often and have the stocks turn back around and go up, and that has happened to me countless times, and it continues to happen to me today. I've been in almost every leader in this rally, and I got knocked out of a lot of them, and that's part of the game. You have to get used to it, and not go on tilt and just pull your stops, because eventually you will take a very large loss, which I have as well. Okay, so yeah, drawdowns are inevitable. They will always happen. The key is keeping them as small and controlled as possible. And Mark Minervini has a great story in one of his books about how he went back into his trades. If he removed the large losses, his results would have been fantastic. So going forward, he said, I refuse to allow any more large losses. If they get me, it's going to be death by 1,000 cuts. So here we go, death by 1,000 cuts. So I googled this because I didn't know what it was from, but it was a form of execution in China, which involved it wouldn't be
Damn.
but these small cuts that would be extremely painful, and eventually result in death. But thankfully in trading, you will not die from taking a lot of small cuts. You can survive and give yourself time.
That is
to
savage.
learn to adapt and evolve. And this is a feature. It's not a bug. It is part of the game. The drawdowns are part of the game. You will be in a drawdown. If you trade the way I do, at least, swing trading, you will be in a drawdown most of the time. The making new equity highs is the rare part. The drawdowns are really what's common. And decapitation, one large loss can be fatal. I've met many traders that have had the one large loss wipe them out. I've had traders where they've had one loss take out multiple years of gains. One large loss. I've had traders with who have large accounts lose it all in one trade. One large loss. So I have taken a large loss, and after that,
Like, is it just me or is that fucking ridiculous? Like, is it just fucking me? How does anyone allow that to happen? Just pissing away years of gains in one trade? Like, how does it even fucking happen?
So the only way to prevent a large loss is you take the loss before it becomes large. So personal journey. Trading is an extremely personal journey. What works for one trader may not work as well for others. You have to find out what works for you. So it took me 7-8 years for all of this to click. And by now I have a pretty good idea of what my strengths and weaknesses are. And the way I use progressive exposure, it's really to protect me from myself, because I get overly aggressive and I will overtrade, which is a weakness that I continue to work on. But hopefully this can help you think about what your personal strengths and weaknesses are, and what you can do to highlight your strengths and reduce or hide your weaknesses as much as possible. So strengths and weaknesses. So risk, the double-edged sword. My strength is the ability to put on risk and aggressively pair them as trades work in my favor. And my weakness is I overtrade and I place a lot of risk on quite quickly. So if my timing is off, I can get hammered pretty fast. So how do I protect myself from myself? Default position size, 0.25 to 0.5% risk per trade. That's much smaller than I used to trade. When I would have very large drawdowns, I used to trade much larger. So I reduced my initial position sizing. And
That's so small.
I increase the risk, 0.75 up to 2.5% risk per trade. That's total equity risk to account. Then the larger size is when all the stars align. That is not a frequent size. That's on a A+ setup when I have traction in my portfolio. And then the maximum monthly loss, I try to keep my losses at a maximum of 5%, and I will reduce risk for the next month if I have a negative month. And you never ever want to have cascading growing losses monthly. That is key. That's how you can enter a trader death spiral, and that is a very unpleasant thing.
And sorry, just to jump in, I think the last time we did a podcast, Chris, we talked about that quite a bit. That was what you're.
I don't get why these people do this. Like, this whole after a negative month, like it's so nonsensical. This point is like, there's no logic behind this. Like, just because you had a bad trade the month before has literally nothing to fucking do with the future. So like, why are you gonna size down when you potentially have like amazing trade opportunities just because a fucking month ago you had a shit trade? Like, this whole thing makes no sense. Like, unless you're like psychologically compromised, which is a bit suspicious, right? Maybe not the best person to be trading if you're lingering on losses from months ago still.
And that is a very unpleasant thing.
And sorry, just to jump in, I think the last time we did a podcast, Chris, we talked about that quite a bit. That was what one of your focuses going forward is keeping those monthly drawdowns as small as possible. Yeah, any kind of with that added experience now since the last time we talked, how's that been going, and how's that kind of helped you both protect your equity but also protect your mindset as well, so you're mentally ready to profit from the better periods in the market when the market cycles eventually shift back to an uptrend?
Right. So it's helped immensely. I have kept my monthly losses to 5% or less. So I have not gone into a large drawdown this year. It's been very controlled. I think a lot of guys, it can be frustrating at times because
I'd have to know more about how this person trades though to like understand why they're doing this. I suspect he's like some highly systematic trader kind of thing. But perhaps his like edge is eroding on his strategy. So he doesn't want to just keep losing over and over with like a strategy that's no longer viable. In which case, okay, sure, fine, this makes more sense.
You know, the market's been, you know, very bullish since, you know, the lows in April, right? But what if you are not trading well, but you see the market taking off with you? Well, you know, that can be difficult. There was a stretch where I sized large on a few trades and had 4 losers in a row, and I immediately slammed the brakes. Even though the market was positive, I reduced size because, you know, if you continue trading large because of the market, you run the risk of a drawdown. And the only way to stop the large drawdowns is you must cut size if your trades aren't working. And I mean, I cover that a little bit later, but basically, you know, if you're not winning, there's no reason to maintain size. You have to stop. You have to cut the risk. Yeah, I mean that's really it's the only way to protect yourself. And you have to trust that sooner or later.
And the other thing about this too is that like. Okay, suppose you have some like set strategy with, I don't know. Okay, these are arbitrary numbers. Obviously, you can just go do actual math yourself. But let's say you have like a 50% win rate or something. Over a course of, let's just say, like 100 trades, there's going to be some statistical streak in there where you're just getting a sequence of losses, right? So you might get like 5 losses in a row just based on the math and the nature of statistics. But then like the probability of that continuing longer like starts to decrease, right? Because you've already hit the improbable losing sequence. So like essentially what you're saying now is, okay, I've hit this statistical anomaly of getting consecutive losses. Now that the probability of this sequence ending and getting back into winning is getting higher and higher with each additional loss, I'm going to start sizing down into this. This makes no sense, right? But like, the only argument I can see against any of this is the whole idea that this person is trading one systematic type of trade, and they're paranoid of getting like edge erosion or edge loss, right? Like kind of fading out of the market. So fair enough. If that's how they manage risk, okay, fair enough.
Well, in a good market, and then all you need to do is connect with a few trades. You're up for the month. And then you can really ramp up the aggression and get really aggressive. You don't want to start ramping the aggression when you're already drawing out. You only want to ramp when you're winning, and then you can get, you know, really aggressive. I mean, I've been helping a friend trade, and he gets, I mean, I would say it's too aggressive, really. I mean, he's risking 4 or 5% of his account, but he's up so much now, and it's okay. I mean, you know, if he's willing to stomach the drawdown, which you know eventually will come, you can be really aggressive. I'm fine with extreme aggression when you are winning and you have the profit cushion. You just don't ever want to do that when you're losing.
Yeah, perfect. Sorry to jump in, but I thought that was a good thing to talk about.
I'm very just. How is this guy a poker professional? This guy seems like he doesn't understand stats or something. Like the whole logic of like sizing into like a winning streak as well is like also irrational. Like it's like a roulette table, right? Like you sit there and spin the ball, and each spin is an individual event. So sitting here and sizing into winning trades, like the winning trades have nothing to do with each other. Like they're completely independent events of one another.
So, you know, so for max loss, you know, at 0.5% risk per trade, you need 10 losers in a row to hit -5%, and at 0.25% risk per trade, you need 20 in a row to hit -5%. So I personally had 20 losing trades in a row. I've had more than 20 losing trades in a row. So it seems crazy. You think, how can you possibly lose 20 in a row? Well, that's what I used to think too. And then I would increase size at the end because there's just absolutely no way I can lose 17, 18, 19, 20, and then it would happen, and then the drawdown would get worse. So when I start losing, I cut the size, and that's what really keeps the drawdowns in control. So yeah, after a losing month, I will reduce the maximum drawdown allowed for next month. So the first month maybe -5, -3, -2, -1, -0.5. So if you have 12 consecutive months of losses following this principle, you'd be -15% for the year. So I've never had 12 months in a row of losing. I've had 4 or 5 in a row, I believe.
Damn.
Yeah, I mean, you know,
damn.
So if you were able to follow this, you know that your annual loss could never be, you know, maybe 15, maybe -20, right? But you keep it, you know, reasonable. It is recoverable. You really don't want the -50, -60, -70% drawdowns because those are extremely difficult mentally to recover from, but also just mathematically. You know, once you're down 50%, I mean, you need a double to get back to even, and at -70%, you need 150, and you need a large gain to get back. And I have done that. I have come back from a 60-65% drawdown, and it was not pretty. I would not wish that upon anyone. And you know, this is a way to prevent that from ever happening. And if you ever do go through that and manage to come back, at least for me, never ever want to have that happen again. Never ever. So and this is the only way that I know of to prevent that from happening.
It is very detrimental, right? We talked about this many times with the idea that like the whole point of this game is getting your account equity curve to go exponential, right? That is the whole purpose of trading / investing in the markets. This is the game right here. So if you're constantly nuking your fucking account, like, you're never making it here, right? You're never making it to the end game. So ideally, you don't want to have ever put on some ridiculous trades like that where you can just nuke your account equity in one bad trade.
If you're winning and have profits, you can increase position size if you so choose to push size, risk, and return, and if losing, cut size, cut risk. So like I said with my friend, he's always asking me, is it too much size? Is it too much size? I'm like, look, you're in the green, you're winning. You have the green light. Once you're winning and the market's good, you have the green light to get as aggressive as you want, really. It's just once you start losing, you must aggressively cut size. Okay, so monthly progressive exposure. So what controlling drawdowns can do for your results, the power of compounding. So I took the trader from the USIC Enhanced Division and showed what happens if you were to cap his monthly losses at minus 10%. And I also reduced his positive months by 10% because maybe he has to be a little more cautious in general. And you can see the year-to-date return more than doubles. And then if you're able to just keep the monthly loss control to minus 10%, you can see the year-to-date return is out of this world. I mean, a 300% return. We take for granted the ability to have a stop loss. So I got to speak with him on the phone. He works at a financial institution, so he has to pre-check all of his trades. So he cannot trade without approval. So before he puts a trade on, he has to send it to HR, and they approve or disapprove the trade. So you cannot have a stop loss. So Minervini has a great quote about driving not having stop losses is like driving a car without brakes. Sooner or later, you just can't stop. So still impressive returns without using stop losses, but we had a conversation about that, but he's adjusted since then. So my experience. So I personally have never come back from a large drawdown in a month, but I have made the drawdown much worse. And I have had multiple losing months in a row, and in hindsight, going back and looking at my results, I realized I'd be much better off just cutting the losing months short, slashing risk, and limiting risk going forward. If you're drawing down, it's likely the market is either negative, your timing is off, or you aren't seeing the ball clearly, or a combination of all three, maybe one or maybe two. Earlier this year, the market was great, but my timing was off, so I cut.
So this guy's like a long only trader or something. Is that the takeaway from this sentence? Okay.
Size up, that's a winner, and you're back in business. You can go back to being really aggressive. That's how to keep the drawdowns controlled. So study market history. The bull markets, they always come after bears. They always come back, and the opportunities are immense. And I wanted to refer to my Evernote where some years I'll have 50, 60 studies of previous market winners. Some years I'll have 2 or 3. So are there always opportunities? Yes, but some years you're flooded with them. Other years not so much. So much of the game is surviving till you get a time, an easy money environment where there's 50 stocks that are up 100, 200% a year, and all you have to do is catch a few of them with decent size, and you can have a fantastic return. So here, so portfolio heat. So risk versus heat. Heat, how much equity you lose if all your stops are hit. Risk is how much initial equity you lose if all your stops are hit. So I have a few examples here, just showing the difference between risk and heat. So heat basically includes your open P&L, while risk is just the initial account risk. So the heat check, if all my stops hit, what's the drawdown? That's simple. So that includes open P&L. So you'll see traders post about online about how they want to take profits. Why? Well, because their heat is too much, right? I mean, I've had times where the heat is like, well, last year the heat at one point was almost the entire the entire account practically. I mean, I was up 100% in the portfolio. I mean, my heat was massive. So are you okay with that? Because that's the potential drawdown. So when to run hot. So this is very important. At the start of rallies, much easier said than done, but when you want to run hot is when you want to let your heat grow and let your open P&L grow, because you can get the potential very large returns. The con, of course, because everything in trading has a drawback for the most part. The con is if your timing is off or the rally doesn't continue, you are going to give back a lot of open P&L.
And you don't have to. You can shave out, right?
Or smaller initial size trades. The rally has been going on for several.
I'm starting to get more suspicious the more I listen to this, right? This guy seems like an amateur, some might say, to put it nicely.
Rally fizzles, the con, of course, if the market continues, you miss out on potential gains. So, and the ways to reduce heat or open P&L, you cut positions, raise trailing stop losses, and you stop initiating new trades. So this is really key. This is a combination of situational awareness, experience. It takes time to know this, and often there'll be false starts. I mean, this rally just took off from the lows, but sometimes you'll have multiple waves down, and on each bottom or what appears to be a bottom, you'll have stocks set up and break out, and they will suck you in, and then the rally doesn't materialize, and they will sell off, and you will give back. So this is really like the art, I would say, of trading. I mean, you can mechanize this. I mean, you can have specific rules, but a lot of it is, at least for me, it's more feel.
Yeah, can we pause on the slide, because I think this is so good, and I think and I struggle with this. I still working on it, but I think there's a lot of traders out there who they miss the start of the rally, and they feel pressured. The index is going up, and they feel pressured, and then they push size or push entries that maybe the leader's already extended, but those are the ones that are the leaders, so they need to get in them. They enter at the wrong spots, get shaken out in natural reactions, and then they've got to draw down to start, and then they push size again to try to get back. It's like a cascading series of events where if you don't start getting exposed and testing positions a little bit earlier, when yes, the trend is less clear, but maybe that's a proper time where you can get maybe tighter entries and actually try to get into 1, 2, or 3 leaders that, if you get into them properly, can ride for the trend coming out of it. But I think this is such a great slide. And just again, speaking from personal experience, I've struggled with this. And like you said, I come up with kind of more of a system, some kind of rules-based approach where the first high or low, I have to start testing some trades as we push off that first high or low, or right near the 21 EMA. If we start taking out that 21 EMA, that's when, for my style, for my system, I need to starting to buy positions if I haven't already. Because if I've missed that in the past, again, I'm in kind of that slippery slope where it doesn't create good trading habits. So this is such an important concept, guys. I think especially if you're newer to the game and haven't gone through a few market corrections and strong rallies from them, you can't.
I'm looking up if you can short sell on this thing.
You do need some experience, but this is so key, guys, and this is a great slide to summarize it. So yeah, fantastic, Christian. Anything else you want to add on this slide based off what I just said, or your own experience with it?
Yeah, so I actually spoke about this on there was a YouTube or a talk I had with a few traders the other day about how, like, the 2019 rally. I mean, that was a fantastic rally. I was probably on average 150% long the entire way up, and I was down 30%, doing exactly what you said, buying every rally or every I miss the initial leaders, I chase, the market pulls back, I get stopped out. It rallies back up, I buy, literally buying the high, selling the low the entire way up the rally. So no,
Top longing, bottom shorting.
Every mistake you can make. But
What the fuck is this guy, man?
Of progressive exposures, it gives you the ability to
Oh my gosh.
survive the learning curve, and make it to the other side. And that's yeah, I mean that's why this is so key.
Guy's a fucking top longer.
Was that that period where you were 150% long and actually suffered a drawdown? Was that coming out of the 2018 correction, or was that at the end of the year, coming out of the choppy summer period?
That was coming out of the 2018. That was coming out of the 2018, like I think end of year sell off.
Inflation.
Right,
yeah.
And I remember there was a few names, Kron, which was like a marijuana stock, and then SE, which I covered in our interview before, where I watched the episodic pivot go.
How's that doing, by the way? Because there's some pretty interesting announcements coming out of like the weed area, right? Oh, I think some pretty massive gap ups on Friday. Oops. Where were the other ones? Isn't like high or something? What the fuck was the tickers called? Remember they're like stupid ass weed tickers. So a lot of people are expecting an announcement on Monday of that being reclassified. And if not, there might be a bit of a sell-off. Might be a chance to get in on some of this stuff before the actual news comes out. Bum, 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 bum. Yeah, Canopy. What was the ETF? Oh, there we go. Samir still here? Not sure, not sure. Not sure. MJ. Yeah, some of these things had monster gaps. Holy crap. 60% in one day. No joke. That is no joke. But damn, this Tesla got me, man. Tesla got me the other day. I thought we were breaking out. This candle, I was like, oh shit, it's happening. It came right back. Getting close, so it's getting close. It's cooking slowly. Slowly but surely.
Or, you know, however many times, and each time.
Apparently, you can short in this competition, so I'm not sure why this guy's like so long only. Maybe it's like too risky for him to be doing.
First one, you know, I was like, oh man, this is like so great. 1%. Oh, it didn't work. Okay, next. Oh, this one has to. 1.5. Oh, that didn't work. Next one, 2%. Oh, that didn't work. Oh, next one, 2.5. And then it's like, whoa, like this drawdown is big, and it only took me, you know, 4 trades, and that doesn't include the other. You know, I had some winners, of course, but you know, same thing with Kron. That looked like it was forming a power play, which eventually failed. It didn't work, but I sized like 3 or 4 times into that one as well. Before you know it, you're down 20%. It's like, okay, well, what do I do now? So you just never want to get in that position where, you know, you're in a good market, but you handcuffed yourself because you put on too much size and drew down. So, you know, even if you're very bullish, you know, I was very bullish, you know, but it doesn't matter.
Being long, you can't lose more than you put in.
And, you know, and once you're winning,
Being short, the recall loss is infinite.
No rush. I mean, it's.
Yeah, but like whoever just like yeah, if you're shorting like low caps in the regular stock market, yeah, okay, sure. Like how often are you ever like shorting Nvidia and just having this thing gap up like infinite on you? like one of these 50% moves, right? We're just looking at. Like how often does this happen on like large caps? Like, if you're like short here and just gaps up to there, quite improbable. But yeah, I would want to be shorting some of this lower liquidity stuff for like that exact scenario. That's not the point. I mean, that is the point. If you're never shorting anything, you're just missing half of the movement the market makes. You're just playing half of the game. Cutting your gains in half.
You know, it's like the first slide. You know, like what's the rush? If you can make 30%.
I think a strategy is doing this to avoid that phenomenon. I don't know. I don't know if this guy trades. I don't know if he even mentions it. So I'm not familiar with how this. Yeah, I've only heard about this tournament through this channel or like competition. I guess I don't know if it's like a tournament per se. The USIC. I'm not really sure how this works exactly. But it seems like this guy's I don't know. Seems a little odd.
A year for
I'll say that.
10, 15, 20 years. I mean, the numbers, I mean, you're going to have more money than you can spend. I mean, the numbers get so large. So it's really about the patience and not, you know, not seeing the forest, not the trees. You know, like you're in the middle of a forest, you're surrounded by trees, but, you know, it's like, yeah.
Yeah, hit some singles before you try to start swinging for fences.
Exactly.
Yeah, awesome, fantastic.
So simple, not easy. That really sums it up. It's simple. It's not easy. It requires incredible emotional control, self-awareness, and great interview. Everyone wants to be a market wizard until it's time to do market wizard stuff. Well, market wizard stuff is sometimes if you're not trading well and the market's taking up, you have to slow down. You know, it's the hard, but you don't want to slow down. You want to make money back right now. You want to make the big gains right now. You see everyone making a huge amount of money, and you're the one guy in the world that's not, which of course is absurd. I promise you, there's tons of traders that have gotten chopped up and missed the rally. I mean, that's me. I mean, I've been at that multiple times. It always looks easy in hindsight. Real time, managing risk, trading. It's fog of war. You know, in hindsight, you know, the generals, it's so obvious what they should have done, but in real time, with limited information as well as the emotions, it's very difficult. I have a friend, my friend who I mentored, he would tell me that he wouldn't want to record his trades because it would show him the mistakes he made. It was like looking at a mirror, like a reflection of yourself, right? Your equity curve, the trades, everything. It's a reflection of you, and he didn't like looking at it.
He's scared of reviewing his own trades.
It's so simple, right? It's an extremely humbling experience looking at your mistakes, and a lot of guys, although this is a thing with poker, poker players have massive egos, like massive egos. I mean, I know some traders do. I think trading is much more humbling than poker. I mean, it's not even in the same universe. I mean, because with poker you can always blame the deck. you can always. You
can blame the market too, though. But yeah,
you can blame the market, but it's different. I mean, it's different. If you play both for a while, I've met so many poker players with these massive egos. I have not met many traders, at least that have been around for a while, that do, simply because trading is so humbling, right? Trading is so humbling, but with poker the variance is so wild, and because it's a one-on-one, or I mean, you're playing as other players, but you're playing as other players, right? It's more of a relative skill game, not an absolute skill game. So as long as you play with worse players, you can win. But trading's not quite so the same. Okay, so discipline, yeah. Have rules, stick to them, sacrifice short-term mental comfort for long-term goals, let the power of compounding work for you. So yeah, so those slides, I mean, compounding, that's really, that's the most powerful thing you can do. I mean, that's the magic of trading, is the ability to compound over time and let your money grow and let your money work for you. And then I hope you guys found that helpful. I'm on Twitter at cflander7, and yeah, that's it. I think that's only 40 minutes or so.
It's all good. We've got some questions to talk through. So, Christian, first of all, thanks for that. I think this is so important, this topic. And the first question I had for you is, you talk about, slowing down when things aren't working for you. How many trades would it take for you to say, okay, my trades, whatever the market's doing, whatever everybody else is doing, I'm not trading well, or I'm not seeing the ball well right now? How many trades would that take to, drop from risking 0.3% to, maybe having that, or whatever your process is?
Right. I mean, 2 to 4. I mean, it depends on the market environment. I'm not in every breakout, although sometimes you wish you were, but I'm not in every breakout, right? So I'm watching the market and seeing what names are working. Are things going up? Are things going down? Is there general market weak? I'm looking at everything. So it's hard to really give a definite answer. But if you lose 3 or 4 in a row, I mean, obviously
I find it so hard to believe this guy was a poker pro. It's like I need to look this up.
That are not A setups, right? So if those don't work, it's just less meaningful than if your best setups aren't working. But yeah, I would say a few trades, 3, 4 trades, and I'm probably going to be cutting size.
And is it similar on the flip side? Because that's equally important when a correction just happened, you're starting to test trades. How many does it take you to ramp up size to normal?
Again, you're looking at everything. I mean, you're looking at what the market's doing, what leaders are doing, what sectors are performing. But yeah, I would say it's, if you have a few trades that are working and then you get an A setup, then I'd size for that one. And if that one works, that's like a big.
Apparently, he's made $17,000 lifetime live cash in poker. I did not know that qualified as a quote-unquote poker pro. Like, does that even qualify as a poker pro? Is this guy LARPing as a poker pro? Oh, this does align with my sneaking suspicion. We'll say that. Interesting.
That, okay, the market's working. working, you know, rallying, I'm seeing the ball, you know, you can really ramp aggression at that point.
Excellent. And
You know, the more I started to watch these videos of some of these like quote unquote notable people, the more suspicious I'm becoming, right?
using a case study of this most recent correction this year, and maybe from a holistic perspective, also like noticing which stock to try. You know, coming out of this correction, around when were you starting to test trades, and how did you kind of pick the ones to give a shot in the first place to see if the market was rewarding your style?
Right. So I was very fortunate that I actually was in the market basically at the lows, and I screwed up a lot of those trades, but I was able to avoid the sell-off. And then when you had the
To be honest, some of these channels aren't doing anything for me. Same. Definitely agree with you there. The thing is, you don't know, right? Until you actually watch these videos, it's like you don't know. Because there are some of these videos where I watch, I'm like, oh, okay, that's pretty interesting. Like, let me go back test that, or let me give that some thought. But the problem is that like you might have to watch like 3 hours worth of videos before you find that like one thing that makes you think like, okay, interesting. That's just how it goes, right? That's how nerding out in the game goes. Like the higher rank you get, like the less there is. Like if this is like time, this is like your knowledge. Like at first it's gonna go up like really quickly, right? But then once you start to get like higher and higher, it's like a huge diminishing returns. So like this last like 5% takes like infinitely longer than the previous 95. And finding the things that will lead to this 5% difference is like a lot of time, right? Just because someone sees your profits, I mean, they know what they're doing. Oh, it's not that they don't know per se, like... I don't know if I'd phrase it like... I don't know if I'd phrase it like they don't know. How do you phrase this? Okay, like this is like a pyramid of all the profitable traders, right? People that can trade profitably, but not everybody like gives the game enough thought to move up with a rank, or they just don't care to. So like, yeah, a lot of people are in here, or they have like the hubris to think that like everything they know is like the pinnacle of knowledge, and they don't believe there is a higher rank. But it seems to me like most of, and I'm not saying this like, okay, yeah, sure, it is a bit egotistical for me to say this. I do think that I probably am better than most of these people, but I don't think I'm anywhere near here. I don't think I'm anywhere near here. Like, I'm sure there's plenty of like elite traders, but the problem is that you're not going to find them online, right? It's pretty rare you're going to find like elite traders online just telling everyone everything, just giving up their game. Because like for me, for instance, if I had some like super defined mechanical strategy, like purely systematical, purely data driven on each setup, I probably wouldn't be telling you guys. But the way I trade is not like that, so it doesn't really matter, right? For me to say what I'm looking for and whatnot doesn't matter, because you still have to like do it in the moment. But it seems like most people on these channels are like somewhere in this range, right? There's like few and far between that show up here. I don't know, right? Until I watch some of these videos and see, I don't know. Kinda just gotta put in the work. What if it's not a pyramid? Oh, I missed some messages, whoops. Signal to noise ratio, pretty high. Maybe better look for a channel that filters out the BS for you. But these are like the top channels, right? These are like the main trading channels. Like the ones with like the quote unquote professionals. Everything else is like below this. Or if it's not pyramid. I mean, it has to be by nature, right? There's no other way to. Like if I take every trader in the world and like somebody's rank 1, somebody's rank 2, somebody's rank 3, somebody's rank so on to like rank, let's just say like 1,000. Like at some point, these people will make up like 5% of all profitable traders, right? Or let's just say 1%. So these people are naturally going to be at the tip of the pyramid. And then as you get like what more and more traders ranked, it's only going to become bigger, right? The next set's going to be like 2%. And then like whatever. It's just naturally going to get more and more. What if there are two groups, gamblers and traders? Well, like we're all gambling. It is essentially gambling. The difference is that you're doing it when it's a cut in your favor. A lot more than like in a casino, every game there's like a house edge, right? You go to the table and it's like 50.5% that the house wins. And then like 49.5 you win. But like in trading, like you can like alter these numbers in your favor a lot. You can have like 80% in your favor, like 20% house wins, or like so on and so forth, however your strategy like dictates. So like what is the definition of a gambler, I suppose? Or gambling. Risking money on an event of uncertain outcome with the possibility of gaining an increased return. Yeah, it is kind of gambling, right? Just that the probabilities are much more favorable. I'm curious, is there any kind of difference? Are trading, stocks, and gambling the same? See if the AI has an interesting take on this. Interesting. It doesn't consider it gambling because you're taking ownership in the business, and over the long periods of time, the market tends to drift upwards. That's not really a fair argument for like short-term trading, though. Okay, let's limit it to like day trading or something shorter time frame. What if we limit to day trading / swing trading / scalping? It's much closer to gambling by default this way. the argument it makes is that if you're just buying or selling, like entering trades essentially without any kind of setup or like knowledge of what you're doing, then yeah, it's equivalent of gambling. But if you do have tested, data verified setups, then it's not. Although I don't really, seems the same to me, right? People have strategies in casino games as well. If I buy a car at a price that I know is below market value, then I can turn around and sell it for a guaranteed profit. However, if I buy a car without knowing anything about its value, without even seeing it, then I'm gambling that I made a good deal. Trading is buying or selling with knowledge that you can turn around for a profit. Gambling is buying or selling, hoping that can turn around for a profit. But you never know. That's the thing, right? You never know in trading. Like, sure, I might have Okay, let's just look up more recently. Okay, well, I deleted the red box that was here, right? But like we talked about this like on the last juice box in the last stream, how this was like the main 2 targets for the weekend. And if I'd come here and taken a long, like I would have got filled on the long, and then I would have my stop loss break even, and I would have got stopped out when it went lower. But like I just exclude what happened afterwards. It's just like focus on this moment. Like when I'm getting in the long here, I don't know for sure it's gonna go. Like, yeah, I would have been looking at whatever data to kind of give me a better idea and whatnot, but then the day it's not guaranteed. Professional trading is a business. This seemed pretty similar to me. The way I'm seeing it in my head, it's the same thing. It's just that the only difference is that the probabilities are much more favorable than in a casino. Because you never know what's going to happen. Like right now, some whale could just decide, screw it, I'm selling all my Bitcoin to buy NVIDIA. And they just like sell like 3,000 Bitcoin at the market, and your price just, if I was in a long, it doesn't matter what knowledge I had, right? Just completely invalidated by one person's actions that I can't predict. Perhaps I'm holding some traders on a pedestal. But yeah, some of these traders, they're actual traders. They know what they're doing and they don't lose. I mean, everyone loses. It's not true, right? That's like the equivalent of I never believe the person that always goes to the casino and wins, kind of thing. Just part of the game. But I will say, like, from these, like, for instance, one of my friends like that I kind of like reconnected with somewhat recently in the summer, who also used to play video games professionally. started trading around the time that I did. And from talking to him about trading, we have like a pretty similar mindset to trading. And like, I just think it's not comparable to these people. And we both have like ridiculously outsized returns compared to the people that were watching these videos. And not to say that like P&L matters or anything like that, because it doesn't. It's all percentage based. But like, there's a fucking reason that we're doing this and they're not. We're just like a higher tier of nerd, basically. Did you watch a CSGO tournament? No, I did not. Although I mean, I'm familiar. I saw that it was like FaZe versus Vitality, right? But no, I haven't watched it. I haven't paid attention too much. I'm a bit familiar. Because I'll watch like some highlight video here or there. It kind of sums up the tournament. The only esport I still kind of follow is Call of Duty. And the only reason I do that is because there's like a podcast every week with people that I'm from, like I used to know. Like, I don't really talk to them now, but like, we were friends back in the day. And they do a pretty good job of like summarizing things pretty quickly. And it's only like an hour or two long. So at some point in the week, I'll listen to the podcast. But I don't actually like watch the games. Pretty cool. It was hard for me to follow, really? Counter-Strike's pretty like pretty straightforward. Camera caster switch up the camera so often. I'm not sure. I don't really watch it, so.
Pushing down, they have to succeed the space.
Like usually they're watching the mini map whenever a team's like about to like have contact somewhere. They like switch to those people. But I think there's even like an auto camera that does this now. It's like AI controlled, determines like who's about to get into a fight. I'm a StarCraft 2 guy. Yeah, I'm familiar with StarCraft, but I never really played it. I was never like a nerd on StarCraft. Because when I played that game, I was like really young. Like StarCraft 1 and what was the other one? Like Warcraft. What was the other one? Command and Conquer. What were the other ones? Oh, Age of Mythology. That was the other one. Age of Mythology. I played those a lot. Warcraft's not strategy. Yeah, it is. Warcraft. I'm not talking about World of Warcraft. I'm talking about like Warcraft 2, Warcraft 3. There's definitely a strategy game. Warcraft 3. RTS. The thing is, in these games, like I played the custom game modes a lot. Cause like they're pretty fun as a kid, like the tower defense game modes and whatnot, where you had to like build like a maze. How do I draw this? I can't even draw this right now. But essentially, it'd be like units would be like automated, spawning at the top of the lane, and then they start walking down, and then you have to build like a maze that they walk through, and like you have things that like the things that you're building attack the units. And the whole point is that as the game gets longer and longer, the units get stronger. You have to like build your like maze more like intricately to like take as much time as possible to get through. Kind of thing. And also like upgrade your like weapons as the game progresses. But this is not like the RTS aspect of like StarCraft. These are just like fun custom games. And this is just one of many. thing with StarCraft for me that I never really cared about was I got bored of playing like the regular like one-on-one ranked strategy mode because the start of the game is always the same, right? Like you're always following the same cookie cutter build. It's like, oh, make 3 drones, then put like 1 on gas, then have 1 get gas as you go block your ramp with like a bunker and a supply box or whatever. And I was like, okay, it's pretty boring because the first like 10 minutes of the game, unless someone's doing some like cheese strategy on you, you're just doing the same thing over and over and over every single game, depending on the map. Supposed to change your build based on the intel. Yeah, but even then, it's like the same kind of idea, right? Like StarCraft doesn't really get fun until like you get to like the mid game. At least for me, like I'm sure people like that game a lot. It was pretty popular. Mr. Bex, hello. Hello, Mr. Bex. How's it going? Not too bad. We're just watching some videos. Which I thought was gonna be about like managing like a large portfolio, but not really. I'm gonna start talking about Counter-Strike randomly. It wasn't close, right? Wasn't it like a 3-0 or something?
Apex on the front of the bomb site. Frozen on the swing. And it's Apex himself to end it. Final word in the second season.
Interesting. Boom, 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 boom. Yeah, Counter-Strike is fun. I miss that game. I don't play anything anymore though. I was watching a few games earlier in the tournament. I'm gonna make my first Kalshi bet. Probably want a pretty safe bet to go with Vitality, right? I mean, I haven't followed the tournament too much, but they didn't like FaZe kind of have some like Cinderella run essentially into the finals. Like they almost didn't even make it to the actual tournament. Because Vitality is like, what rank are they? They've probably been ranked the top rank for a while, right? What was the main Counter-Strike website? Damn, what was their website? Oh yeah, HLTV. Yeah, I mean, in terms of the rankings for this so far this year, like it's pretty imbalanced. I imagine the odds wouldn't have been that great. A lot of times I watch people nowadays, like I'll have like some, like let's say I'm like coding something or like backtesting whatever, or just like listening to like a podcast about trading. I'll have like on my other monitor or other part of my screen, just some like random Twitch stream open. All kinds, nothing in particular as of now. I guess I'm into indie games right now. Yeah, it seems like the indie games have been blowing up a lot. Like, what was the one game that everyone was playing? Like Bonk or something? Or like, what was it called? Yeah, Mega Bonk. Valheim. Interestingly enough, is just Unity stock looks pretty interesting, right? I mean, we were talking about this on stream a while ago. But in terms of a stock that might be breaking out, this looks pretty crazy, right? Like massive base. Now soon it's like big cup and handle on the weekly. Plus, I imagine indie games are getting pretty interesting nowadays with AI, because not anybody can make like an interesting game, especially with how easy like it is to make like high quality graphics games using stuff like Unity, like the Unreal Engine. But I suspect there's going to be a lot more interesting, like kind of indie type games coming out these days. Valheim. Survival and sandbox video game. Interesting. I can't wait to, I guess, have enough capital to hold the trades overnight/days. I know there's prop firms where I just use my own account. Why? If you can do with a prop firm, what's the difference? But I agree, yeah, like having like swing trades is a lot more a lot juicier, we'll say. Because you're never gonna capture some like big move like this. This thing never stops. You're never gonna like short here and get like some massive home run trade down to the lows or vice versa if you're not like swing trading. And those are the trades that like make you the most money by far. I think men are replacing women with video games. What does that even mean? What does that even mean? Prop firm has a lot of rules that can trip you up for some glitch. And you lose your account because of it. I thought just at some prop firms you can't do like you have to close your trades daily essentially. I thought it was like a lot of them have that kind of rule. But if they don't, then fuck it. Like guys aren't interested in dating anymore. Just kick back and chill and play games and hang with the boys. I mean, yeah, I'm sure some people think that, but like, I don't know if everyone. It's always been the case, right? It's always been gamers. It's gotten even more popular. Another thing that you're forgetting is that nowadays a lot of gaming is not just with the boys, right? There's like plenty of girls that game as well. A lot of grills, as we call them. I created a challenge for myself. I started with 200 3 months ago, now up to 5K. Teaching me things I don't normally consider in prop firms. Yeah, prop firms are like, I've never used one, so I'm not too familiar, but like any kind of rule that they put on you that you wouldn't have not using a prop firm is just like some kind of rule you have to abide by. Whereas like when you trade your own money, you should do whatever you want. Do whatever you want. I realize people who use prop firms, they sort of like gambling. Take trades with the emotions that come with your own accounts. I'm sure some people do, but I don't know about everybody. If I use a prop firm, I'd like treat it just like it was my own account, my own money anyways. Yeah, there are some people that go on prop firms and essentially just waste their time, right? They go there and they pay the like whatever fee to enter like the challenge. And they're just like doing stupid shit, trying to pass the challenge. Don't know what they're doing. This is better. I don't have to depend on someone to be successful. Well, it's not depending. Like the whole point of a prop firm, like in reality, like the only reason anyone should be using a prop firm is if like you have some like profitable trading strategy and you want to scale up because you don't have enough money yourself in real life. Like let's say in your case you just started to learn how to trade and you have some strategy that's working for you, but you only have like $1,000 just to your name to invest. It's gonna be like quite slow to get your snowball going in terms of like the money snowball. Well, if you have this option, then like you can scale up a lot faster. But most people don't do it this way though, right? Most people just go on there because like they think they know what's going on without ever actually learning how to trade. And then just like YOLOing it all in like 1 or 2 trades, hoping to pass like the initial challenge. Yeah, it's individual, but most traders in the industry are fairly green. Maybe 2 years in at most. I don't know about that. I don't know about that. From the data I've seen, I don't think that's the case at all. They might say they are on Twitter, but like when these prop firms release the data from their customers, it's like fucking slim to none even get to like the passing the challenge. I started with 200, scalping for like $10, $20. New traders aren't disciplined for that. Yeah, it depends on the person. Like I was the same way. Like I didn't like start trading, just start putting on like my life savings in like in an 01 trade. But like we're like the minority, people that are like thoughtful about this. Don't like losing money. You can't YOLO during the challenges. They're pretty strict. Like that's been my experience. Oh, I'm not sure. Not sure. They have drawdown limits. I'm not sure because I think it varies from prop firm to prop firm. Like, I know people used to like try and game the prop firms where like the rules were a lot more like restrictive, or like not. They had less rules. So people were trying to abuse it. Like they would pass the funding like with some like profitable strategy, and then they would like YOLO the account on like FOMC kind of thing. Because there was like no rules against like doing those kind of like abusive loopholes, which is why they have so many rules now. Because there are people that knew how to trade that were like gaming the system. Like they would do the challenges with like actual legitimate trading, and then like use their capital to like just go YOLO home run trade on like a CPI, PPI, whatever it may be, earnings. How did I start? When I start out what trading? So I had to get a hernia repair, so I had nothing to do in bed for a month. I was like, okay, let me look at this trade and shit. See what's going on over here. And again, we live in a time where instant gratification is the norm, so props feed that a bit. Yeah, I don't know. To me, it just seems pointless. It's like either. But the only world where you should be using a prop firm is if you don't have money to trade with yourself. Otherwise, it's just a. I'll say this actually. There's maybe two cases. One, I'm not sure. Like one is like you don't have money yourself. Where's this damn thing? Don't have large amounts of money. Two, like there's potential tax benefits. And this is gonna vary like where you live. But like I believe that there are some tax benefits to trading through a prop firm. You can get really lower taxes essentially, but that's gonna vary depending on where you live and whatnot. And then the third one that some people do is kind of just like risk, like managing risk. In terms of like at the end of the day, you're not trading with your own money. And you also don't have to have the exposure of having your money. And this is more so for crypto. Because like, for instance, I'm trading with like BitGet, for example. What if one day BitGet just says, fuck you, and just takes my money and disappears? Then I just lost all my money, right? Whereas if I'm trading on a prop firm, I pay them a small fee to do the challenge, and I'm trading with their money. The worst case, they disappear like with money that's not mine. But if it's not any of these three, then like, yeah, ideally you're not using it because of what you just said, right? Like paying them like a percentage of your gains is like pretty ridiculous. And the other thing about that is like, they might be fucking you, right? Like if they see that you're like a profitable trader, they might start copying your trades. And then like you're trading on their B book. And like they start copying your trades because you're making money trading, and they're like causing you to get like more slippage on your strategy because they're like entering and exiting with you. So a lot of weird fuckery that can happen on prop firms. Don't pay the prop firm a decent percentage. I'm not sure what the standard is. I've seen some where they charge you like 10%, which is fucking absurd, right? Like for where I live, taxes are really high. So getting taxed like 10% of my earnings on top of having to pay taxes to like the government. Fuck that. Fuck that. Whoops. Interesting, never thought of that. Yeah, they do all kinds of stuff, right? Like they sell your trading data, potentially counter trade users. It's a very powerful data set when you really sit down and think about it. Like let's say you have like this subset of traders who are all like losing traders. And this subset of traders are all like profitable traders. And all these people are trading, I don't know, like Tesla. And then most of these people are entering trades on Tesla going long. And at the same time, most of these people are entering trades on Tesla going short. And that's like a pretty strong signal, right? Incredibly strong. I live in Florida, so I'm okay. Hmm. Yeah, I'm not sure what the situation is out there in the US, but I know some states are like infinitely better than others for taxes. What if we just find a really bad trader and inverse his trades? People do that. People literally do that. People literally do that. That's part of the reason why I got that Hyperliquid dashboard. And that's part of the reason why I collect sentiment data. It's like very powerful. Like, where is this thing? Like, I found this somewhat recently, so I haven't been using it for that long. So I don't know like what the data looks like in terms of like, using this thing long term. But this whole move down on Bitcoin since I found this thing, like these two people were just bearish the whole fucking time. And yet everybody else was like fucking bullish. As we were just going lower and lower and lower and lower and lower, right? But there's like there's lots of ways to like get data like this. Like this is just on Hyperliquid, but you can also do the same thing on prediction sites, right? Like Kalshi and whatnot. Just find losing wallets or find winning wallets. You can do the inverse. Boom, boom. Well, also funny to notice like the leverage scaling, right? Like the largest, most profitable traders are all like lower leverage, and as you start to go to like the smaller, lower P&L accounts, the leverage starts to ramp up. From like 6 to 1.8 or 1.18. Powerful time trader, I'm investigating all these routes. People do it. Who's what's it called? Kimba. Kimba has like where's his YouTube channel? He has a bot counter trading Sato. Like literally that guy enters a trade and the bot takes the opposite side of the trade. What the hell? I haven't looked at this channel in forever. Look at this thing. Oh, did I close it? Did I close it? Where'd it go? Oh. mean, I don't know if this is correct right now, because okay, so the idea was that this guy put in $100,000 into this account, and it's counter trading the window below. So you see how right now this is like in a ETH long for 8,000, and this is losing 8,000. Now this account's up to over $1 million now, counter trading this guy. So one thing I don't know about this though is that I know at some point this account got liquidated, and they had to like redeposit another 100 grand. So I don't know if they've continued to like if that's happened again since or not, but pretty interesting, right? So literally just a bot counter trading him and just printing money. Wow, yeah, tell me about it. Quite the interesting experiment. And not only that, but he collects the data from the guy's chat of what people are saying in the chat to use as like sentiment data as well. Because like you guys need to think about it, right? Like sentiment data is no joke. Like, why do you think I'm always looking at this shit? Like okay, like, we know the math of trading, right? We know that 90% of traders don't make money, if not more. Like this is being generous. And not only that, but these are the people that open their mouth the most on social media, right? So they can't help themselves from yapping, can't help themselves from yapping / projecting. So they're the ones going on Twitter complaining about this, complaining about that, and talking about whatever their trading ideas are, blah blah blah, right? Just they're just constantly seeking validation from other people, and you're just harvesting them for data. Know what not to do. So yeah, like very powerful. Boom, 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 boom. The only problem is for a lot of these exchanges, you can't find like user data, right? Like basically you have to do it on the ones that are on chain, like the decentralized exchanges. Because like for instance, like on Binance, I can see who's opening and closing trades, but I don't know who it is. Like I can just see like where is it? Like right now on Bybit, for example. Like, I can see that somebody opened like a $12 million long. But I don't know who this is, right? Or why. It could be a hedge for all we know. But yeah, when there's ones that have like a publicly available data on everybody and all the wallets, you can like collect a lot of interesting data from there. Yeah, so I suggest nerding out on the data, guys. That's my advice to you. Also, I think it's almost time to head out of here, yeah? Time is it? Damn. You guys are keeping me up late these days, god damn. Anyways, guys, I'm up to bed. Got work in the morning. No, I'm about to go too. I'm about to do a juice box and head out of here as well. Don't want to start the week off with like a 7-hour stream, going to bed at 2 a.m. A lot of week ahead of us still. Shout out to you though. You're progressing pretty quick, right? When did you start trading? You know, a lot of people come through here randomly. Some stay, some don't. But you know, you're in the one of the few I've seen come here. I'm like, interesting. That could be a whale one day. Mr. Beck's guy's got something to him. 2 years? Oh, never mind. No, I'm kidding. No, but actually, it seems like you're on a pretty good path, right? It seems like you're on a pretty good path. Like a lot more thoughtful, a lot more level-headed than most of the people that come in here, just like speaking extremely confidently about everything, like they know everything. Quite interesting. I'm just giving you shit. I'm just giving you a hard time. That's the goal, right? We're gonna have a community of whales here in our little corner of YouTube. Little do they know, right? All these people following these like massive channels. Little do they know. We're the whales lurking in the depths over here. Stealing their money slowly but surely. Yeah, let's do this juice box and get out of here, right? Oh, I'll know it'll be a particularly interesting one. I mean, I'd have to be waiting to see the reaction on the gap fill first of all for this thingity thing right here. And kind of see how London session starts reacting. For the long, it's probably flipping this zone, right? Because you're a bit late. Like, if you were going to get filled, it was going to be on this sweep, right? Kind of talked about the start of the stream. Right the yellow line, right the golden pocket. Right as like futures were about to like start opening, we came down to this level. It's ding, ding. Like futures open and we came down, ding. Reverse ever since. Not really sure about to fill the gap. So you kind of missed that one. So now your best bet's going to be like flipping the zone after the liquidity grab. Because there's a world where we come up here and like tap any of this garbage and like if we fill the gap, naked point of control, go lower. Fill the gap, seeing these poor highs, like go lower. Fill the gap, grab the liquidity, like go lower. So these are not like the best zone to be trying to get into long right now. If anything, you would have been getting in on the retest of the value area high, right? So you kind of missed that one as well. So best bet is going to be waiting for this to get flipped. I just kind of leave that written down, right? Flip the golden pocket slash, I will say 91.3. Or say bearish or retest, right? Bear or bullish. Also be a little careful, right? Like I'd be very paranoid if the market opened tomorrow. So we might be correcting lower still. Like there's no guarantee we're gonna go higher from here. Like we have done like the 886 to like the golden pocket now. So the question is like, are we gonna flip this zone next or not? Or not? So I'd probably be like my eyes glued to the order flow on market open and see what's like really going on here. Because it does the world really like start to like drift up overnight to the zone. Or like the market opens and we come up, tag this, and just start nuking right after. So keep all that context in mind for this. And other than that, nothing has changed in terms of the longs. Like the levels below we've already talked about previously. Also like the red box flip we've talked about like many times. So kind of got everything covered in that regard. Plans have not changed. Our time frame plans have not changed. For their shorts, I mean, it's going to be the things we were just talking about, right? We already talked about these higher levels, so I'm not really going to talk about these in depth. But like, either we like fill the gap, which I don't know if I'd be taking that personally. I'd rather just wait for this to get cleaned, if anything. The chance, like, if we come up here and just do this, we should be leaving like poor highs again. The marginally unswept highs with a bunch of liquidity resting right there. Probably even more now. Like this box is not updated. But imagine there's even more liquidity building up here at this point. So like, if it is going to be this one, I'd probably like wait, right? Like let it like come down and like start to like lose the VWAP. Maybe even lose the Battle Area high. But be patient with it. And then for these ones, yeah, you can be a little bit more aggressive with like limits if the data is like looking against aligning. Or like the bear dibs, order flows looking a little sus, so on and so forth. Yeah, like this zone, and probably like this zone, right? Or the main three ones. I just say the three circled white zones. And other than that, nothing has changed, right? All these higher levels, we've been like talking on and on and on about it. We've been discussing it since here, basically, right? Here, like this entire sequence of price action, we've been talking about these upper levels, so literally nothing has changed. So I'll kind of just leave that written there as well. I just keep in context that we have been talking about the potential like for a squeeze here. Just keep that in mind. Like, don't forget about us potentially blasting off here, because we are starting to like coil up, right? Like this like red box and this crap. Just starting to like near its conclusion. So like whether we start to go up from here or like do some like bigger move down, then go up, or just go down, period. Seems like volatility is coming. Imagine if you look at the Bollinger Bands, they're probably squeezing pretty tight too, slowly. We have them on here. No, we don't. Oh, yeah, we do. No, we don't. We do not. Yeah, like you were starting to like squeeze in the bands, right? So seeing some compression, aka some expansion, is cooking slowly. Let's see the actual percentage. Now we're starting to get to like the outlier territory of this like compression, right? So hopefully we'll be seeing some volatility soon. Everyone's prepared for it. Hopefully zoomed out your charts a little bit. That should do it, right? Kind of cover everything. Longs from above, longs from below, shorts from above, shorts from below. Yeah. As usual, right? Just kind of get some of the juices flowing. Don't trade these blindly. Make sure there's actually edge forming when the price gets to these zones. If not, don't take it. And we're out of here. We are out of here. Gonna go do a quick chat shout out and get things going. Shout out to Dev. Dev's been out here typing a storm up in the chat. God damn. I'm scrolling with an infinity scroll mouse and it's just Dev. God damn. Shout out to Samir. Haven't seen Samir in a while. Shout out to Samir. One of the OGs, right? One of the first ones here. Shout out to Mr. Vex. I think that was it, right? More or less. Catch you later. Yeah, you too. You too. Good night, bud. Yeah, you as well. Back tomorrow, usual time. And hopefully we have a nice juicy week, right? Hopefully these trades start running. Or the short starts running, right? We might just close out the longs and let the shorts start running to the downside. Either way, I'm pretty excited. Excited to see how this turns out. Same with the traditional market. Excited to see what's going on here. Excited to see if Tesla can finally break out or not. But we'll get caught up tomorrow when we're back. Until then, let's just rest, take it easy, sit on our hands. Later. Later. Later.